bop, bing, bop, boom. Be ready for us in a second, guys. Yeah, let's, everybody. Do. Ladies and gentlemen, what's going on, everybody? What's going on, everybody? Getting a few things set up here. How's everyone doing? We'll hop into the computer in just a moment. Take a moment to say hi to some people that are here. Os P3X, what's up? What's going on? Dump before the pump? Maybe. Maybe. We'll pull that up. What's up, Hamburger Helper? That's a cool name. I like that. Stuck in a painful range. Bulls need to pump it. We are kind of in a painful range, aren't we? Just kind of going sideways. What's up, Trader Forever? What's up, Andy? How's Tradeify working out for me? I'm not trading with Tradeify anymore. I maxed out on my sim payouts, so I can't get any more sim payouts. And I had a live account, and when you go to live, you use a lot less funds, right? So I made 80,000 in sim payouts. Then they'll take 20,000 for a live account. They'll pay you 80% out or whatever you can do, and then you have like a different risk measurements. So I just went kind of balls to the wall, so to speak, is what I've been telling people. Balls to the wall, trying to like see what I can make out of it, and I didn't make anything out of it. So I can still trade Tradeify, and I still like Tradeify, but the only thing is I can't get any sim profits like I did before because they cap it. It's like their hedge, right? It's a business, right? Once they find somebody that's really successful that can kind of like take advantage of the leverage, they have to kind of they got to cut you off, and you got to kind of go elsewhere. So I'm still a fan of Tradeify, but I'm using that leverage in other prop firms right now. We can talk about which ones I'm using shortly. I'm trading a couple, and I haven't really named them because I've heard good things about the payout process, but I want to be very clear that I have not received the payout yet. So until I do, then I'll talk about them, because I don't want people to like go, beat me to the punch on like making a payout, and then all of a sudden something goes wrong, and then they come back to me. I'm like, I just prefer seeing the money in my bank before stating who it is. I don't mind mentioning Top Step. Top Step's a big one. I've seen their payouts through many traders that I know, so I'm fine with mentioning them this one. But the new one that I'm trading is still kind of a whatever. All right, who else we got here? Yep, FOMC today. We'll watch Jerome Powell live. We'll watch the markets live. We'll see if there's any good opportunities in the market. What's up, Froggy? What's up, Rosebud? What's up, Chris? Angela, Terrence, Sam. Everybody out there on Twitch. What's up, MS Trader? Good morning. It's been a minute. You always show up, though, on my Twitch streams. I love it. What's up, Doppler? Everybody else that's on Twitch. Twitch is like the quiet community. I have like 5 people watching, like they're on Twitch. Like maybe 20, but yeah, that's the small one. What's up, Dan? What's up, Assassin? All right, let's hop into the tiny little corner of my office here, into the computer screens. Lower this music down in the background. Take a look at what the market's pricing in. Morning, good call on VVV. That was all you, Vinny. Hey, what's up, Vinny? Did you get my email? Hopefully you did. Try to sync up on Thursday if you can. I still got to clear some things out with the fam, but that VVV was all you. Coincidentally, your name is also Mike. Wonderful. What's up, Core? Tick traders, S to F, instant funny with no consistency rule. I have never tried that, Sam. I haven't even seen their website, so I don't know if that's new or if that's been around. I haven't heard of that one. I don't think I've heard of that one at least. For some reason, it sounds familiar, but I think I'm getting it confused with like a influencer that like makes fun of traders online. Tick something trader or something like that. So I'm getting a little confused maybe here. Chris, no, so Chris, when you mentioned that, so you went live and they gave you 20K instead of 80. No, they paid me my 80,000. So that's why I like didn't really care about too much of the live account, right? So I got my money. I used the money already because I did the pool and everything. If you remember that video that I made, but they only allow for a up to 20,000 for the live account. So it's like I was doing so good, and then all of a sudden they move you to live. They pump the brakes hard. It's like, why wouldn't I just trade my own account at that point or trade another prop firm? And it's there's really no benefit for me to trade live with them. I just don't see the benefit, at least, of trading live at a prop firm after making good money. You see what I'm saying? So it doesn't, I can't wrap my head around it. Like, yes, okay, so I guess everyone's situation is a little bit different. I think for most people, for a lot of people, that would be like an opportunity to like really outshine and grow the accounts, and whatever the case is. But I went like max accounts, and I just couldn't focus on a $20,000 account, technically two $10,000 accounts, when I'm trading a significantly bigger portfolio, right? And I can't, and what benefit would I get? I get 80% payout versus 100% payout, right? So my thought was this. My thought was simple. All right, well, if a setup occurs, I'm just going to go full bore, and that's it. And if I don't get the payout for this, whatever, I'm focusing in on my other accounts anyway. And then the rules to get the payout, right, are different. You have to have like 30 days of like something like I can't remember, actually. Don't quote me on that. I can't remember. I thought there was like 30 days of a certain amount to be able to take out the amount. And I'm like, 30 more days of this, but trading a smaller account. I'm like, I just don't got the patience for that. So I opened up some different prop firms that I can utilize leverage, and then I focus more on my swing trading. I tried to go balls to the wall. It did not work. But overall, I took from that account $2,500 in total, because I spent $2,500 to buy 5 direct funded accounts on Tradeify. So that's my total amount, and I spent 40 plus days to get to my first payout, and then I ramped it up and got all my other payouts until they pushed me to live. So for $2,500, I turned that into, I guess, 72,000. That's after their split or whatever, right? 72,000, which is like a 2,900% increase. Like, I can't do that in my own swing trading portfolio. I don't take that kind of risk. Pretty cool. Pretty cool. Let's run it back. All right, so far right now, the market, we're seeing more sell side in tech, right? So I want to talk about the market here because I'm kind of just rambling. Okay, we got tech kind of getting hit here. Actually, let's just look at the heat map. You can see, I don't know if that's updated. Yeah, so we had some China news about banning chips or something like that, right? So AVGO down 3%, NVIDIA down 3%. These are big market moves. They have a high implied volatility. These things can put pressure on the market, but we're getting really positive breadth in the market. Like everything else is, in the most part, green. Okay, so we have a divergence of breadth, right? Positive breadth in a lot of the big names, but the market's kind of taking a hit because of the larger market cap kind of space here. So my guess is, let's actually look at IWM. Yeah, IWM, right? It's up 1%, right? So more broad market type of move. There's a lot of financials and energy names within IWM. Yeah, so I pulled up regional banks, and regional banks here is up 1.76%. So that's doing really good. I will pull up some individual names from the financial perspective that I kind of noticed yesterday. Actually, I'm going to pull one up right now. NTRS. Yeah, it's up a little bit. We'll see, because this all can get changed very quickly when the Fed comes out, or it can kind of make it look a lot better. It's kind of one of those coin tosses. Okay, so it's mostly coming out of tech right now is what we're seeing here. And we're really just kind of holding lows of the day. We're seeing a move lower, we see a bounce back, and it just kind of keeps fading. And this is happening while the S&P 500 is at, I don't actually think this is the call wall anymore. I need to update that. My bad. But it was the call wall, and it was a primary gamma pin, gamma level. And we're right there. We're at 6,600. My thought is simple. Underneath 6,600, you got to be a little bit more cautious. We can swoop down. Above 6,600, I still think is pretty bullish because of just the dynamics of what we're seeing from a net gamma perspective. So you see, this is 6,600 here, and there's plenty of liquidity, 50 points higher, 100 points higher to 6,700, which is now the call wall. Our gamma flip level is at 6,500. So we're in a position that where dealers are forced to just suppress vol, right? They were good for delta hedging. They're going to be buying the dip. They're going to be selling the rip. So until that changes, I mean, the market is still really bullish. So when I approach this from a day trading perspective, I'm looking for extended moves to the downside, and I'm looking to do what the market will do, buy the dip. Now, that's I'm saying from a day trading perspective, to quickly measure that, and then I'll just talk about swing trading, but to really gauge the intensity of a sell side, it's going to be really interesting today because we're seeing such positive breadth. So if we get a capitulatory type move with the Fed, it'll be shown in the tick chart. And that's what I like to use. I like to look at the tick chart, the NYSE tick, to get an idea of capitulation. And as you can see, if we look at NYSE tick, which is, the broader market, what do you see? Yeah, it's under zero, but it's not going anywhere. We have nothing down here, even after the tech went this way. And then we started up rather high. So my drawing, that's pretty good. So a capitulatory move would be, down minus 1,000, and then I would look to execute into that. That would tell me that everything from a broader standpoint is getting hit. And that's kind of the extended area. On the flip side, if everything starts moving up past 1,000, that, things could get pretty frothy, and you could look for potential like shorter term scalps. I'm not huge into shorting unless if we really have negative market net flow, and we really haven't had that today, at least so far. It's been actually quite bullish, right? So the two levels in SPY from a gamma range perspective, we got 665 to the upside, 656 to the downside. And we've been in this kind of just range, right? This is the 15-minute chart of the SPY. It feels as if we can come down to last week's closing price, right? That doesn't seem crazy to me. And, that would probably act as some sort of level of interest, given the fact that it has in the past, right? Last week's closing price it has been a level of interest. In fact, where was it? I think it was, I can't remember last week's, but it bounced off there a few times. I think it was down here. I can't remember. Okay, so I'll be looking maybe at that area. All right, I'm not jumping to the bit here to start buying dips, obviously, as we're heading into the Fed meeting. But if we do get that capitulation, I'll be looking for that. As far as more sell side in SPX, I would say 65.90 looks like that would be a place to watch too, given the context of 1 DTE gamma exposure. So if I go here and I look right here, this put wall is at 65.90. So that would be a level of interest to the downside. So even if you're trading NQ or MNQ, if the S&P 500 reaches down into these levels, it could still be a level of interest for other products to bounce, given the correlations and given the exposure into tech that the S&P 500 has. You do see these levels down here kind of showing little spikes, but they're not as aggressive, but they are areas of concentration that traders are reaching. So 6,550, 6,500, and 6,500 happens to be also where that gamma flip line is. So if I bring up just the S&P 500 here, the daily implied move for the SPX is all the way down here at 6,553. And as you can see, if I zoom all the way down, the gamma flip is still way over here, which is kind of by the lower weekly implied move. And, being unchanged for the week as it stands right now, if I show you the daily EMs, right? I forgot to upload it on this chart. Maybe I can just do that now. Control C, Control V, ba-boom. Right, Control C, Control V, ba-boom. This was not done right. Let me move that there. Wait, right? 1, 2, 3, 4. No, wait. Yes. Wait, what? 8, 9. I'm confused. When did last week end? Let me see here. I want to do this because it's a good, no, last week was 9/8 to 9/12. 9/8 to 9/12. Oh, okay. So I did that wrong there. So boom, boom. And then this goes boom. Yeah, because there was like a holiday week here. So this week, I'm assuming, was only 4 days, right? So the week prior to that was 9/2 to 9/5. Okay, there we go. All right, so this week, let's draw in the expected move more correctly here. Go settings. We'll go to the coordinates, 66747. And it is a bigger expected move of 10.06. We got, obviously, because of the Fed interest rate decision. And a big OPEX, 64735, 647.35. Okay. So the reason I'm sharing this is because if I look from a year-to-date perspective, these are all the weekly implied moves, right? All the orange lines, that's what you're seeing. The blue lines are just highlighting the times we closed outside of it. But the reason I'm pointing out is because so far, year-to-date perspective, we're looking at over a 70% probability of tagging and or exceeding the expected move. So being as it's only Wednesday, we got 2 trading days left. Well, today and 2 after this. We're basically unchanged on the week, and we still have a wide open range of risk. And the market's probability has been 70% plus this year of tagging and or exceeding an expected move. So in short, this means there's a high probability that we still move 100 points in the S&P 500 or 10 points in the SPY. So to confirm it or deny it, I want to go into the trade tab and I want to look at the SPY and I want to go into the options chain and look out 2 days to this expiration. And if I look here, guess what? The market is still pricing in plus or minus $9.66 of expected move. Today, it's still pricing in $5.27 of expectations of a move. So there's still that swelling of volatility right now. Now, after the Fed comes out, after we get our press conference, after it goes away, this will come in. It'll come down. My guess would be that it comes down. I would imagine it would. That's going to be interesting if it doesn't, because this is kind of that implied event. More volatility equals more risk, whether that's up or down. But the market, as of this moment, is still pricing in about $10 worth of risk. So, I mean, pick your poison. Are we going to the bottom, or are we going to the upper, or are we not? And we're not going to touch. I'd also be surprised then. That would be the lower probability instinct, is that we're not going for a tag. There's a 30% probability of that, given the historical frequency. Now, if we do break to the upside, we have our month-to-date implied move, our quarter-to-date. Look, we're so close to the quarter-to-date implied move. This is what the market actually priced in right here. So on this day, or the next day, we drew out those quarterly implied moves. This level and this level were drawn out this day. The market priced this in ahead of time. And if you think of it in terms of a standard distribution, right, blah, 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 68% of the time, sometimes more actually with the S&P 500, we're going to go for a tag and or close within this implied range. And we're kind of up there. So yeah, there's risk tilting. There's less risk tilting to the upside, more reward technically tilting to the downside, but also you got to be kind of like crazy to just like go net short here, right? Because the market's been so strong. So for me, what have I been doing? I've shared it in my last video or two, or whenever that was, that all I've been doing is kind of just going more into cash and then leaving good trades on, right? Or trades that are working and updating my stops, or taking new positions that kind of make sense from a risk to reward standpoint. We go back over to gamma levels. Where are we? We're still there, sitting at lows for the Qs. We're floating around that 6,600. Remember, 6,590 would be the 1 DTE put wall. And then if I look at market net flow, it's really not bearish right now. It's leaning more bullish, but there ain't no convergence, which means that we can have what we're seeing actually right now, just chop leading into an event. I'm going to take a look here at the comments in a moment, and then we can hop into some individual names, individual sectors. And if anything opens up in the meantime, as far as trade executions, we can go about looking at that. I did some trading today. I traded around this call wall. I traded a couple of bounces here in the morning. From the prop firm, not from my personal accounts. You guys like the YouTube thumbnail today? I had a laugh when I was doing that. I was like, I'm going to change my thumbnail. I thought it was funny. All right, let's see here. What do we got? We got all kinds of chatter. Chatter, chatter, chatter. In-source from trading, and if you do maintain that discipline when it comes to needing unexpected expenses, how does that not make you trade more aggressive? Yeah, so as of right now, yes, my biggest source of income has been trading. But it's not my only source of income. So there's a big distinction there. Yeah, most of my income now has been coming from trading. YouTube doesn't really make me anything. My Patreon was there to help me transition from a corporate job that paid really good money and, great health insurance, great everything. That Patreon is what helped me transition to do this. So just jumping into a full-time trader, it would be much more difficult if I don't have any sort of backing or it's incredibly difficult. So that's why you see a lot of traders or a lot of professional traders, they'll have another source of income, or if they're a professional trader in the terms of a real proprietary trading firm, they have the leverage and support of a team and a lot of money to be able to make great money, right? So there's a big differentiating fact from now, if you're just a full-time trader from home, you really do need a significantly sized account to make sense. And if you don't, you'd be just taking on too much risk, right? Think about it. If you only had $100,000 account and you're like, I'm going to be a full-time trader, what are you going to make 100% a year? Probably not. So what does that mean? Well, that means, because if you make 100% a year, you'd be the best trader in the world. Every year, 100%, right? Name somebody who's done that every single year, right? You can have streaks of good wins, good, bad, you can have a 200% year, 300% year, whatever the case is, but to think that that's going to happen every year. But that would if you were taking money from that, you would make $100,000 a year. So you need significant size portfolio. And that's where most traders fail. Is it's not that they don't understand or do that, or whatever. It's typically they're not undersized. I'm trying to think of the word here. NQ break into new lows. They're undercapitalized. They don't have the capital to actually be a full-time trader. The bulk of people, right? So if you don't have the capital to be a full-time trader, you need to be a part of a proprietary trading firm. I'm not talking about like a little prop shop, but that can help you get there. But I mean a real, I'm talking about in terms of a real firm, but you can use these, whatever firms, but they have all these rules and restrictions, okay, whatever. Or you need a side job or your main job, right? Or some sort of additional revenue to help kind of alleviate any sort of stresses or pressures of having a bad day, a bad week, a bad month. After you make enough to not need to play by the rules, there's no reason to not do it on your own. Yeah, exactly. The only reason why I'd say you can still do it with them or a different firm is because the leverage is pretty crazy. Like for my own money, I'm not going to use that type of leverage from a prop firm. I'm not going to turn $2,500 into $75,000 in 80 days using my own money. I don't use that type of leverage in my account. But with a prop firm, yeah, you have to follow their rules, but I mean, you do have the opportunity to do so, I guess. I mean, I did it. I'm living proof of it, and other people do it. It sounds too good to be true, but I also remember posting, when I first started with the prop firm, I basically showed, I was like, I only want to make like a few extra $100 here and there and see if I can maybe make my mortgage. And I remember posting my first like $600. I was like, oh, this is sweet. And then all of a sudden 600 turned into another 600. This was from a different prop firm. And then all of a sudden I was like, all right, I'm going to try Tradeify out. And then everything changed. I was like, wow, this is pretty cool. No prop firms offer the ability to swing trade. Chris, you can look into actually a real prop firm and they offer swing trading. So for example, like Rain Trading, which Dante is part of, right? He's one of the main people at Rain Trading. That is a prop firm. It's expensive, and you have to pass their test or whatever, and then go into like a phase 2. And even then you get to work with a professional desk, but you're not going to get paid until you prove that you actually have edge. So it's a very difficult, long process to get their type of funding. Rightfully so. They're not going to just give real money to people, right? And they do offer swing trading. So as far as swing trading with other firms, I'm not 100% I'm not too positive, but I haven't seen it. And remember, day trading is a lot more riskier than a swing trade. Do I trade spreads for swings? I don't, VA. I don't. But I'm not opposed to doing spreads. I don't trade options. I trade equities. And then I sometimes day trade some futures here from prop firms. I don't even use my own money to trade futures right now. Quantum doing well. Yep. Bishop, you made 250% off BTDR off the trade idea 2 weeks ago. Congratulations, man. That's a big one. Yeah, BTDR. Let's take a look at it. Let's see. Yeah, it's still looking really good. I made a few bucks off of it. I didn't make no 250%. But yeah, looks pretty nice. I actually didn't enter here, and I kind of waited for the U-turn, and then I think I bought through here on this day, and then on this day, I pretty much sold out right at around here, I think, actually, or it stopped me out around here. I don't think I have any left. But yeah, awesome. Nice little breakout there. This is a pretty volatile name, but still, nonetheless, good stuff. All right, NQ, also just another new low on the day. Kind of this little hammer candle here. Maybe we get a little bit of a chillness here in the market, or we're just kind of selling off into Fed meeting. Watch the Fed meeting just like end where we opened. Crazy. You managed to pull 30K from prop firms. Good job, Darth. That's crazy awesome. Rain or Rain. I think it's actually, Chris, I think it's R-A-E-N. I think it's R-A-E-N is the name of it. So you can look them up. That is a real trade desk, but they have the opportunity to prove yourself to be a trader. Yeah, we can look at that. All right, what's up, Exotic? We'll take a look at plug. Right as you said it. I'm right on it, Exotic. It's the window behind like my thing, so I have to always remember to click through to it. Yeah, we can look at some of the what's it called names. Yeah, so Dante, his name is Dante, Trader Dante. He's been professionally trading for a long time. Like, he trades boons. So he doesn't quite trade like this stuff, I mean, he might at some points in times, but pretty sure he's kind of like specializes in that. But he's one of the main people over there, I believe, if I remember correctly. Okay, let's pull up the Qs. Somebody asked for the Qs. Qs down slightly on the day, down 43 basis points. So basically nothing so far. We'll see what the Fed comes in, what they say. This is after like a 7 to 9 day winning streak. So yeah, we're taking a little bit of a breather. Big whoopah. It stands right now. Yeah, we're down on the day. VWAP's not too far away. We're kind of just doodling as we head into the event. All right, NQ, as we kind of said here, this little hammer candle. Can we see a little bit of a bounce, little reflexive bounce? There you go. There's a little bit of a reflexive bounce. I probably would have actually traded that for a contract or two. I did not. I'm actually kind of interested in this. You get a lot of movement around 25s, 26, 27, that kind of range in here. So I wonder if this strong move here is going to get kind of rejected right throughout here for like just a little bit of a pullback. Might happen beforehand, but okay. Market net float still bullish, no convergence. No breather on the Dow. Yeah, DIA is coming up to its upper daily area. Yeah, doing good. The diamonds. IWM, right? Same thing. Doing good today. It's just tech. Right now, it's just tech. And it puts the drag on the market. So if I go to Market Watch and we look at the heat map and or even we just look at the advanced decline line, we'll go S&P 100. I mean, that's a lot of green on my screen. We have 83 advancing stocks and 18 decliners, but it's so fun. Look at the capital flows. You got only 19 declining stocks, but look at the capital flowing out. It's kind of funny. You got much more capital flowing out, right, to the selling than obviously advancing names, or the decliners than the advancing names. Got Adobe up, American Express. Oh, that was in last night's video. So some of those financials, right? AXP. There's the breakout in AXP. We also talked about, I think, WFC in last night's video. WFC is up 88 basis points. NTRS, that is up a little bit, up 90 basis points. Still within that contraction pattern. We talked about LC. Lending Club is up 1.69%. Some of the other trade ideas that we had mentioned. WIN. See what that one's doing. Still flagging, holding at that 20-day. It looks pretty good. I can't really execute new trades right now going into the Fed meeting because I have no idea what's going to happen. So maybe set alerts for like breakouts like above 123 or something like that. And if it happens after it, then cool. But I don't know. Oil names. We talked about Halliburton. That thing is coiling up hardcore. Look at this thing. Higher lows, lower highs, and we're just in this like tight little pocket right here. Not for long. We gonna break out? Fortunately, the direction of this is still like in a bad trend, but we also talked about OVV. OVV slightly down. Let me remove that thing. OVV slightly down, but also, a lot of these oil names are kind of just in these little tight little areas. We talked about Sound, S-O-U-N. Let's check on that one, see what it's doing. It's up 90 basis points, or it's up 100. It's up 1%. We'll just call it. Still consolidating sideways. I'm not a huge fan of these type of names, but if you enter this kind of stuff, you got to just have really understand the beta of it. Which in last night's video, I tried my best to explain beta, what that is in easy terms. I'm not trying to talk about the mathematics of covariance and variance and how it's measured and all that good stuff, right? But just hopefully in easy terms. And we talked about Target, TGT. That one's out today. I did take a position in Target, at least a starter. See what we can do. It's already a lower beta name, so my starter position can be a little bit heavier as far as capital goes to it, but we'll see. I would have liked to maybe see an undercut and then maybe turn back through at some point. Some of these names, Stinky Man in the Woods from the Discord, he pointed out Clorox, and I loved Clorox, so much so that I did take a position, but it was flagging yesterday when he was starting to break out. He mentioned it, and nice follow through today, up 1%. But this looks pretty good, right? You have this low, boom, it bounced from it. It came all the way back, bounced from it, right? Bam, we flagged with higher volume, and then we started breaking out with a nice little uptick in volume here too. So I thought that looked like a pretty good setup with the good risk to reward. You know, maybe coming right back up to 132. Perhaps maybe even going to test that 200-day. So that was a good looking setup. What's Intel been up to? Intel, we've been kind of monitoring. It hasn't really gone anywhere since I brought this one up. Let me see what's in chat. We can actually, I'll list out a bunch of names here if we can. If y'all want, drop tickers in the chat and we can pull up some individual names. We can look at either their implied vol moves for the day, potentially the month, and or we'll just look at the daily chart and see if any setups are happening. Meanwhile, I just want to keep an eye here on NQ. Looks like we're just kind of just selling off and, you know, just slow bleed right now. Slow bleed. This is a 30-second time frame. I'm just seeing, you know, quick moves with the opening range. I also have charts with like the 2-minute. I'm on another computer here, but okay. Nice, Dan. Okay, I'm seeing some names come in. Yeah, we can look at GME and Q. Okay. I mean, we already kind of looked at Q, but we'll pull up GME. Path. RR. Tip about what's going to happen in gold. UNH. Oh, I still have a position in UNH. Tube, you traded pro with Nomura, Japanese bank in London, 12 hours a day. Tough job? I would imagine that's tough. It's pretty cool, though. Probably got some good stories. CRM. Pimp. The difference between the SPX levels you update every day pre-open and the GEX levels, GEX 0 levels you get from Trading Tick Spot, they should be pretty similar. The 0 date levels that I update in the morning are just from Gamma Lab, right? Because they you know, it's looking at that. And then if you do GEX 0 for SPX in the Trading Tick Spot, they should line up fairly closely from a 1 DT to 0 DT perspective. I just pull them from Gamma Lab. Everyone aggregates their data a little bit differently, but for the most part, like the big outstanding, like for example, if I go to here and if I go to SPX 0 DTE and not change, I'm gonna do a strike. Like there's interest, this one, they're pointing out more interest at 6,500 right now from a 0 DTE perspective. And for me on Gamma Lab, they're showing 6,590 is the put wall for 1 DTE. But they're also, you know, Trading Ticks is showing something different. So I've always liked just I like looking at Gamma Lab and watching these levels. And then Trading Ticks here for this, I do like to look at the change and see where like change is occurring. But mostly I actually don't have that set on SPX. I look at SPY. So if I go to strike on SPY, it'll look like that. You got 661 as kind of the magnet here, which is prices below that right now. And then you have these growing 655, 653, and then you have kind of a wall above us at 664. So the ones I share mostly are from Gamma Lab. And then I look at market net flow here. I think TradyTix removes certain types of trades from their way of doing things. That'd be a good question for, you know, the TradyTix people. I think their support or something, to maybe get a better kind of idea of that. Yeah, JD. So we'll pull up JD. That's another one. We got I don't have a study that plots expected moves. Oh, on TOS. Yeah, that's my thing. I made that. Tech stocks. So Ion. Okay, so like kind of like the AI stuff. IONQ, Rigetti, QBTS. We'll put that in the list. Bull. I think UMAC was one that I was kind of watching too. That one I think broke out already though. Can't remember. We'll talk Tesla. Rio Vale. So Rio Vale. Nike. Do I still have it? No, I don't have Nike anymore at the moment. BHP. I think I moved the capital into something else there. UPST. TTD. DD. Path. Oh, we already got Path on the list. TLT. IWM and Wolf. Is Wolf WOLF or is it like WULF? Do I ever look at ES options? I do. I look at the options chain, but I don't trade them. VDE. All right, let's go over to Twitch here. Let's see here. Hey man, what's up, generator? Have I talked about open? No, we can pull up open too. That'd be one. And Lily, LLY. That's a big list of names. Did I miss anybody's? That was a lot. That was a lot. Holy moly. So Wolf is WULF. Okay, I thought so. Wolf. Gold. Yeah, we did mention gold. DFDV. Never heard of that. That sounds like a is it in play sort of name. QCOM. MSTR and Okla. So the theme is AI, basically. Yeah, seems that way. Alrighty, we're just floating in around that 6,600 level at the moment for SPX, and tech is still kind of that laggard for the day. Heavy, no real bounce whatsoever. Double checking my accounts, make sure I don't got anything randomly on right now. That's happened to me in the past. I'm doing pretty decent for the day. I don't think I can go much higher on this one because then I'd break the consistency. But I do have a top step and perhaps maybe can press buttons there if something opens up. This is the first time you're using actually like funded accounts, like the larger funded accounts with Top Step on Top Step X platform. I have that. Usually I did the 50Ks and I just like the $1,000, it was $1,000, like, I don't know if they still do that now, but that's what it was when I was trying them back in the day. And I just, the $1,000 drawdown limit, like it just moved. And then you needed $200 like a day. It was just like, I would get up there and then I would have a down day and it was like, oh my gosh, it took me so long. It was so drowning. Like it was just too much. It just didn't work for my style. And then these accounts, these 150Ks, give me that kind of freedom in that movement, which so far has been doing good. And now it's not $200 a day minimum, it's 150. And instead of using micros, I'm trying out the larger names, the larger content, the minis, to see if I can just kind of crank it. So using those, I got to be significantly more tactical. With MNQs, with this type of space, I can be a little bit more free, like give it space, give it room, start it out, get the feel of it, build into the position, and then get off. But with NQs, it's like you can't really do that. Like to an extent you can if you build your portfolio up significantly with these prop firms, but if you do it like at the beginning and you have a bad trade right out of the gate, it's like, oh, okay, yikes. And I'm still kind of within that zone. Like I think I'm up 15 grand in 3 trading days, which is awesome. Spread over 5 accounts. 4 trading days, sorry. Today is one of them. But it just means that it's still like, if you go too crazy on an NQ contract or a couple, like NQ can move like this if you just catch the wrong trade, and if you don't get out, like there you go, there's your account, boom, bye. You know, I don't know if that would technically do that, but it'd be close. All right, let's pull up those names. Do I believe that since Fed rate cuts are priced in, we would see a sharp decline today? I don't know what Jerome Powell's going to say. Crank that GME. All right, we're going to just look at GME for you guys. Oh my goodness. So yeah, I wouldn't be buying GameStop here. It's not my style. GameStop. I mean, it's just sloppy. So if you get luck, like it did tighten up down here, but also it's like if you weren't in like here, or like here, it's like maybe you entered and got the squeeze, but even if you did this, like that wasn't too bad. But where would this stop be if I were to enter now? And when I look at this, I'm like, I don't know. Like down here? I guess that would be minus 7%. So if you think that the squeeze is going to, blow through here and get like higher, that would actually kind of make sense, where you have 15% higher and your stop would be 7%. And if it breaks up really quickly, you can move your stop up and kind of reduce some of that risk. But it's kind of already made a nice move here, right? From down here to here, about 16%. Kind of seems slow for GameStop, to be honest. So, I would be looking for consolidations. If you get the consolidations, if you get the tight price action, right? We've seen that countless times in GameStop where all of a sudden you get volume on the way up. It goes sideways. People forget about it. They get tired. They get out. And all of a sudden, bam, it goes for another leg higher. Seen that a few times. But like right now, it's like, okay, if I enter right here, am I okay with holding it, down here to potentially go up higher? Am I okay with coming down to fill the gap? Right, and then if it starts moving up higher from right this point, where do I get out? Where do I update stops and so forth? So if you're in it from down here or down here, you're doing fine, right? There's really no reason to panic. You can update your stop, or take partial profits, however you look to mitigate risk, and then go from there. But if I just look at this chart overall, like there's no gauge or barometer. You just see it like sell off and then you get a quick squeeze. Then it sells off and you get another squeeze. So kind of hard to like gauge risk in something like GameStop. If you're trading an intraday right here, we have a lower eyeball range down here, upper eyeball range up here. That's like 25.15, 25.50 up to and around 27 to 27.50. Currently below the daily VWAP. We already mentioned Qs, so I don't really need to talk too much here. We're just kind of holding lows. It's been kind of walloped by, the tech stocks, right? Mainly, I think NVIDIA right now. If I go to S&P 100, you have your largest market cap names. It's basically of AVGO and NVIDIA, so it's semiconductors. AVGO is breaking through its under I vol range. Actually, if I bring up the Asher bot right now, and we'll go ahead and run a code for AVGO, I vol range. I like the Asher bot, AVGO. 351.25. So it was right about here. It was actually right there. So this is the Asher bot, one standard deviation move. One, that was not an S, one standard deviation. Oh my gosh. One standard deviation move. Now the 2 sigma move is 342.50. So 342.50 is down here. So for AVGO, remember, if we come down here, there's, if you think of things in terms of a standard distribution, right, 68% of the time for one standard, 2 standard deviation, 95% of the time that we're typically within that. So it's pretty rare to have a close outside of a 2 sigma move, albeit possible. But if you thought like, hey, I'm going to buy under the 2 standard deviation move, I mean, that makes sense because you might have the probability of it coming right back in and you can create some good moves there. There's also a probability that we come right back up here, right? We still have the Fed meeting, and right here is lined up with what right now? It's lined up with the daily implied move. Or sorry, with the daily volume weighted average price. But this is also, you got to take into consideration that it's also coming on the back of news. And the news happened to be from China about, what was it, banning chip sales or something like that. NVIDIA over here. Let me pull up AsherBot for this. I like AsherBot's levels, 171.05. Right here, this was the 1 standard deviation move, kind of well within just that vol range that I have here. And then the 2 standard deviation move is at 167.22. So down here. So are we going to get some 2 standard deviation moves? Maybe. I would be watching those levels. Let's go like this. Let's go edit properties. We'll write it in. We'll go 167.22. Okay, boom. And then we'll go ahead and create an alert. How do you create an alert on here? I always forget. Oh, there it is. At or below. And we'll do a little sound. That sound won't. God, these sounds suck for an alert. All right, that alert works for me because that's also my other one. I'm going to go ahead and create alert. So if we get down there, I'm going to be alerted that we're at a 2 standard deviation move for that. Okay, let's look at path. Path looking good. That's moving up to its upper I vol range today. Let's look at it on the daily. Path on the daily is kind of breaking out of this little flag over here. It's not the greatest context, right? 200 days still declining, 50 days still declining, but the shorter term 20 day is catching up. So these type of moves, right? If we had this little inside trading day, also a flag, like, yeah, if you were able to buy the open, this would make complete sense from a risk reward standpoint, targeting up here and or that's 200 day moving average. It can obviously go higher than that, but given the context of trend, these type of moves, like when I look at the trend, that's the first thing I typically do, right? And then I look at the compression of it. And then from there, I kind of map out like, hey, given the context of trend and the compression, like what size of a position would I do here? And given the context of the beta of this, which is pretty high, it would be smaller. And then given the context of trend, probably be even smaller to give it that room and space to breathe. And then I'd go from there. I'd probably remove some profits if it does come up into these areas up here and then see what happens from that point. I prefer the trend being my friend, and you're just seeing a series of lower highs. Here, you're seeing a couple higher lows. And then overall, the trend is kind of just neutral. If I go to a weekly time frame, I mean, this hasn't gone anywhere for quite some time, actually. So another one that kind of got on my radar was Match again. This one's been going sideways for a long time. However, look at the daily chart. The daily chart is above a 20-day, rising 50, 200 days starting to slope up here too, getting a series of higher lows into a pivot area. And if you look at the weekly time frame, it's been going sideways which you might be able to call a consolidation. And this could be the start of a markup phase. It looked like a start of a markup phase up here, and then we had volatility hit, right? And the reason I say that is because the averages started to flatten out to move up. And now we're pretty well off of the 200 or the 40-week, 30-week moving average, 10-week. So this could be the early stages of a markup phase in a name like Match Group. So if this does break out, you'd be wanting to pay attention to like psychological levels, like up here, right at about 50 would make sense. If it doesn't get to 50, that's fine. You would have a stop. You know, this would be kind of your risk level here. Well, I guess your risk would be wherever you buy it. So it'd be basically, this would be the risk. Okay. If I was to try to go to 50. So if this was your risk, say that. I mean, you can go smaller risk, but if you want to size your position where you can let it breathe, then I would give it more room. And then 50 would be here. That would still be like over a 2-to-1 reward risk ratio. So, okay, that was path RR. Good volume coming in. This is a robotic name. Okay. Yeah, I mean, this thing looks like it can generate some pop, but I'd be looking for the consolidations, right? So big move on volume. It pulls back up, right? It pulls back on lower volume. You like seeing that. Boom, we see a move up, higher volume. Love seeing that. So now I want to see it consolidate for like 7 days, 5-7 days. See it come sideways, see it maybe go down a little bit, and I want to see that volume dry back up, and maybe that gives the opportunity for a move higher. It's kind of like what I pointed out on sound in last night's video, right? Nothing changes. Like, it doesn't matter about the name, but like, look at sound, right? Big move up on good volume, came down, lower volume, boom, move up on higher volume, bam, it's starting to consolidate here on lighter volume. So the expansion comes, hopefully volume comes back in, helps me kind of expand in the direction where I can kind of follow my style, which is try to make the most amount of money in the shortest amount of time with the least amount of risk. And that's how I approach it. Gold, somebody had mentioned earlier about, hey, what's your, I guess, thought on this? My thought on gold is that it's pretty frothy here, and it's very, 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 very well correlated negatively to the 10-year yield. And then also the dollar, right? It's been pretty negatively correlated, but the 10-year yield, right? If I pull up TNX, if you look at this move right here, take a look at 10-year yield. This right here, or this right here, right? Boom. Okay, if I look at the dollar also has been kind of going down, but not nearly to the extent. And the dollar we were talking about the other day of how it's like in this 18-year channel. So my thought on gold is, I mean, one, it really depends on how we interpret what the Fed does, but a move like this will get digested like it always has. And then you start to look for pullbacks and consolidations and see if we get follow through. Right? So if you if you fade it, like, so for example, I shorted miners, right? So let's see where that's at today. It's nowhere today. I did take some more off today in the open though. So let's actually see if it's higher or lower. Yeah. Okay. So I took some off at the open. Now it's basically unchanged on the day, but yesterday I shorted, or the day prior at the close, basically I shorted, right, in and around this area. And then I took some profits. Why would I be so quick to take profits? It's because the miners are doing hella good. It's just they're extended, they're frothy, right? So they can come way back down and consolidate, but the main flow of all of this is up. And I'm sorry, it's kind of confusing because I'm looking at Dust, the proxy that I use, but if I look at GDX, the miners, what do you notice here? I mean, it's up, right? It's going up. So yeah, a strong move like this, it's going to have down days. It's going to consolidate, it's going to fade, but you got to understand that there's people looking to get their positions on after run up like this. So if I fade the opposite direction, what I do is I simply pretty small positions for the most part, unless if it really starts kicking off intraday, maybe I can add some and then remove some really quick, which I happen to do. The thought here is you take advantage of the extension, right? And then from that point, you can start to reduce pretty quickly on moves down. And then if you want to go long, you can do so. That'd be very difficult for most traders to switch from being short to going long, but the overall flow of this is to the upside. So the easier trade would be just wait to see a consolidation and try to play it more to the upside. That would be the easier trade, which I would probably recommend most people do. What you don't want to see if you're bearish, you don't want to short a move like that, where you get these little pullbacks into a pivot, it breaks out on good volume and then consolidates again. Like if you were shorting this, right, a breakout here, I would not short a breakout. I would, however, fade a move up like this, and I'd be out probably this day or most of it out. Actually, I think I was, now that I'm going to think about it. A move like this, and then I probably would be completely out if I left some runners on this day. I would not hold on to it. Now, I could be wrong. It can flip right back down, but in this case, it went up, right? So as far as gold goes, yeah, gold's going to move today. It's going to move. There's quite a bit of volatility priced in, right? If I go to trade tab over here, like 2 days, we're looking at $5.60 moves of just for the remainder of this week. So gold, $5.66. We'll go from where we are right now. Was it $5.66? I mean, the market is pricing in a move like this for the next 2 days of trading. All right. That would be a 1 standard deviation move. So we can't be shocked. Was it $5.66? Was that? Yeah, $5.58, whatever. It's $5.60. So we can't be surprised if we see, you know, go up another 1.5 or down a 1.5. It's well within market expectations. If it goes 2 standard deviation move, that'd be a 10% move. That would be pretty shocking. That'd be a big move. That means there's a big impact of what Jerome Powell did today. UNH. I still have my position in UNH. Let me see where that's at. I gotta see for my own eyes. UNH was funny. People were giving me crap for UNH. Well, not really, actually. I got more crap, actually, for shorting miners. Which I'm up in. I don't know why. At least right now I am. Yeah, 43% up in UNH, and I did it in 2 accounts. 36% in one account, 36.5, 43% in the other. And this was, I started with a small position in UNH, and I started I've originally started, I think, around in these areas, and then I sold some. I tried to get back in somewhere, and then I sold a little bit more. I think that on this day, I thought we were going to break out, so I actually chose not to sell any. And then I think I got out at more when it actually came back around like that. And I was like, oh, come on. And what I did there from just a pilot position or still having some on, I just traded intraday throughout these moves, looking at the eyeball range. And throughout this area, I managed to average down and actually be pretty much break even on that position, into the point where we just started moving up higher, and then we get the gap up in consolidation, and now I'm up 43% on the position. So the average price, and it's not a full-size position right now, by the way. It's back to out of total, it's basically a half position. So it's not much. So I did take some out on these moves, but where was my entry? Or I guess where's my average price? Where does it even show it, man? Come on, cost basis. Where you at? 248. Yeah, 248.91 right here. My cost basis is down here. I didn't enter down here. I traded all throughout here. Just my cost basis is down here. Kind of cool. So overall, if you're still looking to try to enter into this, yeah, I think that these healthcare names have really good potential. So I actually would say pay attention to some healthcare names. Yeah, UNH, it broke out, boom. Look for the consolidations, look for pullbacks, right? There's big opportunities, I think, that in some of these names. I probably would look to add, actually, if we come back to this 200-day, I would like to see it pull back a little bit more, or maybe even come back down to this area. And then I look to execute more. Or maybe if you're like, I just want a position now because you think it's going higher from this point, yeah, maybe start small. And if it goes against you, you can add more. And if it goes in your favor, cool, it might do this, right? And then you can add more on a breakout. just approach it how you see necessary. But if you go all in all at once with no real plan, it doesn't give you that freedom to kind of move around. But let's look at other healthcare ETFs. PINK, right? Pink, good ETF. Simplify ETF for healthcare. This one's holding up good, breaking out, back testing, up a little bit today. Above a 20-day, 50-day, 200-day starting to flatten out. Like, this could be the start of actually some nice moves. Let's go back to, last year's little high point right here, which was 33 bucks. That's a big move. I don't know if that was the high last year, but yeah, no, that was the high last year. Okay. What about XLV? I like pink because it's a little bit better managed, but if you go to XLV, as far as like holdings and weights, but if you look at XLV, you can go to the Analyze tab and you're like, okay, well, 12% of it is Lilly, then JNJ is 8%. So it's obviously cap weighted heavy over to here. And you'll get that same stuff, but pink is also ran by Mike Taylor. And he's pretty influential in the space and always has had some really amazing calls. So either one, but it is well managed. So I guess both of these are. Or you can look at individual names, right? CRM. Salesforce. Hey, what's up? Fang88. Thanks for subscribing to the channel. If you're new here, make sure to subscribe. Whether you're on YouTube or you can follow here on the Twitch. Yeah, we can go over market flow. SP 500 is under 5,600. Remember, 6590 would be kind of a level of interest down there. Market net flow, still nothing much going on. We saw a little bit of a spike here. I don't pay too much attention to fast spikes, but needless to say, it is heading higher, and the green line is flattened out, and there's no convergence, right? So market flow for us right now in this moment, no real edge here, so I wouldn't put too much weight behind market net flow. I'd be looking more at the price action, expectations of moves, gamma exposure levels, which we're doing, right? 65.90 would be a level of interest to the downside. To me, that looks like we can get there. I don't know if that's going to happen before the Fed, after the Fed, or even if it's going to, but that would be a definite possibility. So I'm not looking to try to like force run any buy dips right now. So if it does come down, like if we just come down to here, like that's just last week's closing price. We'd be unchanged on the week. Surprise, surprise. It's been going on pretty frequently. A lot of chop, and then just weighted down by tech, by semiconductors. So hey, if semiconductors want to step back in, let's do it. Let's see what we can have happen. As far as CRM goes, yeah, once again, I look at trend first. Below a 200-day, declining. 50-day, declining. 20-day, flattening out. But price is under it. So right out of the gate, when I look at this, we're seeing lower highs for the price action, kind of matching lows here for, once again, year-to-date perspective, price action. This tells me, one, if price is contracting and coiling up, and if I want to try going long, it's going to be more tactical and a smaller position. That's right out of the gate what I see. Now, then I say, okay, do I want to execute now? And I look at this, I'm like, no, not really. So if I execute, where would my stop be? Okay, maybe I play up to where? The 50-day moving average again? So there, and then where'd my risk be? Right here? So then I have to kind of zoom in, look a little bit more technical to it, like, right? Okay. But if I just look from here to here, it's minus 1.62%. I definitely wouldn't do a full-size position. But even if I did, that's not that much risk. It's just the probability of getting stopped out here, given the context of what trend is. Weak stocks typically get weaker. Strong stocks typically get stronger. My thought is that I'd probably end up getting stopped out. So I would probably just pass on this and look for other opportunities. If you're in the position, I don't know where you'd be in at the position at. But if you were like in down here, you saw this undercut and you're like, I'm going long. Oh, you're in the position. Now for me, I probably would have taken profits up and I probably would be moving on. But for you, if your stop is down there and you're just holding on, then hey, perhaps maybe this is, even if you come back and go back up and maybe it builds out a base and starts to move higher. I just don't want to hold through any sort of base building. Because remember, my goal is to earn the most amount of money in the shortest amount of time with the least amount of risk. So if I tie up capital, it could be potentially missed opportunities, or it could be, could be a bunch of things, right? I don't know what's going to happen with the name. But that's the thing. When it comes to managing risk, like you can be right or you can be wrong. Like you come back and say, oh man, see, I should have bought it. It went up. Okay, well, do that over the course of 10 years. Because there's going to be plenty of times with what I say, it's going to play out where it's like, oh, I was wrong. Oh, I was wrong. Oh, I was wrong. Oh, I was wrong. You're going to have the, oh, I was right. But what you need to find is that consistency of how you approach it. Now, if you're saying this because you're thinking about going short, I mean, I don't even like this as a short. Like, I'm just not interested. I mean, it does make sense technically because you're under all of this stuff. But maybe if it you short the pop and it comes back down, breaks down, and you're trying to see if it undercuts this down through 220, down to 200. Okay, maybe. But also, like, I don't really, when I short, it's typically smaller position. If it's a swing trade short, let me clarify, swing trade multiple days, over a day, not intraday. If it's a swing trade short, my max position is half the size. So, if my max position is 10%, it's not really my max position, but 10%, my max short position would be 5%, right? Because shorts, like, it's harder to do. 2, they happen at a faster rate. When you're right on a short, you typically get a faster move in a more volatile move. So that's kind of in place for me to just protect myself and protect my capital. Okay, there's CRM, JD. Yeah, a lot of these China names have been doing great. Yeah, we'll look up Upwork and Pi and Amex, all those stuff, generator. JD, I mean, we broke out nicely over here. This wasn't even a setup that I would be kind of considering over here. I was more interested in BABA, which was a trade idea. And I showed it even on Twitter on a weekly basis. But right now, JD is kind of sloppy. So I would want to see it tighten up for me to want to get into it. On a good note, on the run up here, you are seeing supportive volume all of a sudden. In fact, that's probably the best volume that we've seen pretty much from the bulk of the year. Pretty much the bulk of the year, this run up right here, and then right here. So now I want to see this consolidate on lighter volume. So it'd be one of those names that you want on the radar. A lot of China names are doing good, but I bring up BABA because this was the BABA trade idea. The BABA trade idea was down here. And what did we say on that trade idea? You can see a target hit of 180. Did I think it was going to hit this quick or come up this quick? No. Did I trade it? Yes. Am I out? Yeah, I'm pretty much out of the position fully right now. If not, I'm all the way out. And now what? I wait for consolidations whenever they occur and then look for new setups. Right? Look at how this consolidated, got tighter on the daily time frame. 20-day was sloping up, 50-day was sloping up, 200-day was sloping up. We had a bigger consolidation here. And then if you go out to the weekly, we had a nice big consolidation in a markup phase. Those are wonderful setups. That's why I brought up match. Is because is this kind of trying to take place here too? Whole different sector. US-based name, if I believe correctly. Match Group is United States, company in the US. I like these type of setups. You just, they don't work all the time. You just got to manage the risk. So yeah, China names. What else do we got? PDD, Pinduoduo. I mean, this looks pretty darn good. This is a weekly perspective. All right, let me go ahead and just, it's kind of like a more of a, let me remove this. Let me clear this drawing set. Okay, we get the Fed interest rate decision at 2 o'clock Eastern Standard Time. I'm just keeping an eye here. Let me see here. So Pinduoduo, okay, so this is coming up and trying to break out of this. It's not as clean as BABA, right? So maybe coming back up to this 160 area might actually make sense. If I go to the daily time frame, right? it's breaking out here. I don't know if I'm really excited about like entering right then and there, but as you can see, we've been seeing it kind of climb higher. So if we can get some consolidations in and around this breakout area, let these averages kind of catch up a little bit, look for the pullback, look for the consolidation, and hey, try to target up there. What other China names are there? Those are the kind of the bigger ones. Baba, PDD. What are your main trade types? Rats on my mind. My main trade is like swing trading equities. Is that what you mean? My main, it depends on the conditions of the market. I look at conditions of the market in two ways. Where there's a flip that happens where I go more into day trading, and then there's a time where I go into more swing trading equities, which is the one that we're in right now. However, then there's signals to that where make me take my foot off the gas a little bit if things get too excessive, and then I can put my foot back down the gas when it makes more sense in that throttle. So it's not like one strategy, it's kind of a scale, right? Day trading, swing trading, and then when you get to these extended areas, there's different styles that occur within this framework. And sometimes even swing trading can occur into day trading. If the position itself worked out really good for me, I can cut the position dramatically and turn it into potentially a swing trade. Kind of like what I do with UNH. Tiger is definitely a more speculative name, but yeah, that would be one to watch. You're actually kind of in this kind of bull channel here, and we're getting one of those pullbacks now. Right? So yeah, these are definitely speculative, but also would be a name that should be on the radar. You can see some big moves in these. Oh yeah, I did DIY. This was one I traded. I still have a little position. This one I've been stocking for a while though. And we're at highs for a while. And you could see over here, we were building higher lows. And this got on my radar for a minute. Even when last year in December, on December 18th, over here, I had an interview at the NASDAQ, and I had mentioned a speculative name. And unfortunately, they couldn't air it because I mentioned this speculative name. Apparently, that you can't do that. I didn't know. So I couldn't. So I got like the low quality version of it that I can kind of cut little pieces from. But it couldn't be broadcast apparently for some whatever reason, all the legalities or whatever, and you mentioned certain names, whatever. This is on the OTC market, and this was one of the names I was like, this one looks like it can have explosive year. But I also mentioned just China names in general look like they can be pretty explosive, and this one's up like 50% on the year. Could get reversed, could go higher. Also, the reason why I like this one so much, one, it had that same issue that like Luckin Coffee had, LCKNY or something like that. What is it, Luckin Coffee? Luckin, LKNCY. You know, I remember trading this at like $2 or $3 or something like that. I got stuck in a trade, and then they like, I don't know, something happened. But I was like, dude, this is like the Starbucks over there. This is going to be like, this is going to kind of like work itself out. And same thing with Didi. Like that's like the Uber over there. And look at it now. It's like at $40. And even if you look at the daily time frame, right, you still get these consolidations. So it's still risky playing these type of names. Maybe they get back to uplisting, right? Maybe at some point, maybe not. I don't know. But still, every once in a while, like I'll take a look at them. Grab is kind of South Asia Pacific, I think, name. Right? Am I getting that right? Analyze Pacific. Cambodia, Indonesia, Malaysia, Philippines, Singapore, Thailand, Vietnam. And this one was on the trade ideas over here. And the only reason, once again, is why I look at trend. You see the higher lows. Price action's contracting. Did I think that this was going to happen? Absolutely not. I don't know what it's going to do, but it gives you a good risk to reward. And we saw a nice breakout. So here today, it's pulling down. It's down 5%. You know, after running, I don't know. There we go. Basically, you know, 30%. So now I'd be looking, hey, if this can pull back on lighter volume, I would be all over this name again. Why? Because I think I might still have a little bit in there too. The reason is because look at this breakout. Look at the volume all of a sudden. Bam, 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 bam. We're talking 100 million plus shares. I know it's a low price name, but that could be some institutionals type money coming in here. That's big volume, the biggest volume basically all year, 3 days back to back. So if we can get pullbacks and volume comes in lighter and declining, and we can hold this kind of breakout fit 5.5 area, like I would love to see it down here and then see strength and try to buy right back up into this area and even higher potentially. If I look at the eyeball range, we're trading underneath its eyeball range for the day. You know, like intraday trading, these things, not my style. You can see how choppy they are all over the place. So I don't really give too much weight to the eyeball ranges with names that are not as liquid. Still above a rising 5-day moving average when you look at the swing 15-minute time frame. And you can see we're kind of at that point of shelf and volume. So if we kind of under this, like it can slip off. So I'd be keeping an eye on this one. Somebody had mentioned grab earlier. I wouldn't be looking to short it. I would be looking to see how it consolidates. Okay, we did CRM, we did JD, we did grab a lot of names in here. Once again, IonQ. Yeah, great setup over here for early entries. This one slid under my radar, but see how this tightened up really nicely over here. Tightened up very nicely right at the 50-day, 20-day, 200 was sloping up. These are the names that you want to keep close eyes on, right? So we try to find these names that are tightening up, which we showed earlier in the show, some of them that are. Like some financial names, some oil names are still doing it. And then bam, you get a big breakout on volume. Would I be starting a new position up here? No. Of course not, because I don't want to wait for consolidation. I don't care if it goes up higher like this. I would still be waiting for a consolidation. And then I would be looking at the volume. Is it coming in? Is it drying up? You know? And then I'd look for another thing like this. People forget about it over here. When volume is low and price action is kind of going sideways like this, people tend to forget. They move on. They go to the next shiny object. But this is where you should be paying the most attention to. Unfortunately, when it comes to like, you know, creating content, people will love to hear about names that are already moving, but they very rarely like to flood into names that like haven't moved at all yet. I don't get it, but that's the case. That is what happens. More volume means more eyeballs. More eyeballs, more talking. Rigetti, RGTI. Riget. I don't know how to pronounce it. Yeah, nice base breakout. Once again, coming up to these highs. Looks like it can reach it. Look for consolidations. The AI trade is still alive and well right now. Look at these higher lows that built into this pivot. That's probably why it was marked out on my screen. Nice. I'd be, once again, if you're in it, great. If you're not, be looking for consolidations. QBTS, another kind of, what's it called name? More of a quantum AI, whatever. Also, nice strong move in these names. Look for the consolidations to occur. If you're already in it, awesome. You can update risk. You can take partial profits. You can hold on to it if it's an investment, whatever the case is that fits you the best way. I was looking at these names down here. Do I think it was going to go way up like this? No. Okay, but you know, why was I looking at them down here like this? Is because what? Big volume move. Oh, surprise, surprise. Let's go back over here. Big volume move, consolidating on what? No volume, price action tightened up, good risk to reward. You look back and you're like, wow, right? You don't know what's going to occur after it. This happens all the time though. You don't know what's going to happen after it, but at least you put yourself in a position where you know buyers stepped in at. And then when it starts like freaking people out, people take their profits, they get whatever, but yet you see volume just like turn into dust. You can very, very, very well likely see volume come back in, and hopefully when it expands, it's in your direction. So you get the volatility to favor you versus the other way around. Bull, B-U-L-L. I was looking at this one. So this would be one of those names that looked like it broke out of a nice contraction consolidation over here and then faded. Boom. So I'd be out. I don't know if I can't remember if I traded this one. If I did, it would have been right here and I would have gotten out right over here. And right now it's down. And it's kind of just holding these lows. So I don't really have a setup here other than if it starts, you know, coming back up, you know, coming back to life, perhaps. But right now, it's kind of just forgotten about, which if it was forgotten about, but it looked like this, with the 20-day up like this, 50-day like this, I would say, yeah, it's a time to look at it now. Even though that it's a higher price, I would still be like, yeah, but it looks a lot better than it does, you know, moving down like this. So, you know, if it doesn't break down, if it comes up, cool, awesome. But also, I still wouldn't be interested at that point. I want to see it. I want to see it prove itself, and I want to see the consolidation, some supportive volume for it to make sense. So for me, I would just, if you have it on your radar, you have it on your radar. But I wouldn't know where to put my stop here. It just doesn't make sense for my style. UMAC. This one's kind of interesting. I don't know what this is. Unusual machines. It might be drone, something about drones. I can't quite remember. I wouldn't be entering here, but I do see kind of this consolidation happening. I prefer these names to get tighter. But you did get the good volume. You actually have little pockets of actually good volume here. So you have this volume right here on the way up. Boom. Okay. Dries up completely right here. Bam. You get a nice big volume move higher. Bam. It pulls down. Volume. Where is it at? Doesn't exist. Bam. We get a pop up higher. You get a little bit sprout in volume. You get consolidation. Where did the volume go? Nowhere. This move up right here. Bam. You get all of a sudden some volume coming back in. Okay. It pulls right back down. What do we see? Lighter volume than usual. And then all of a sudden now, you're seeing this move here, and you see, oh, a little bit of an uptick in volume here on this day. Okay? This move was basically unchanged, but you saw a little bit of a snap. And then over here, you're seeing a little bit of an uptick in volume these last couple of days. So for me, you know, this is a pretty big move kind of straight up from this, like this point to this point. That's like 30%. And I don't really feel like having a stop that's 30% lower. So for me, I would hope to see it like come in a little bit, consolidate, and then tighten up the risk. So I can still use a small position given the context here. But this would be like one of those names you don't need much capital at it, and it could benefit your portfolio greatly if it breaks out in your direction. Tesla. It looks strong. Higher lows. Bam, we broke out. Nice big breakout. Chasing up here, I don't know, but if I were to chase, it'd probably be from more of an intraday, shorter term perspective. And yeah, I mean, 500 would be a key target. 450 would be a key target. Some bigger, rounder numbers. And right now, price is holding up pretty good as it's just consolidating that recent squeeze higher. Some might call a manufactured gamma squeeze. And gamma squeezes in this name, we know from history, can get intense. Remember over here, right? Squeeze up higher, some shakeouts, bam, bam, boom. So yeah. For me, I would use this as a stock and play right now, and then if it consolidates a little bit longer, then I'd be more open to it. But if I go to the 15-minute time frame, like, all right, I'm not going to enter right now from a day trading perspective. Perhaps if I was looking for entries, maybe I'd be looking for underneath daily eyeball ranges where I just take a little pilot position. Then if it does it again the next day, I'd be taking a little pilot position, kind of scaling in at areas where the market priced in for risk. Or I just wait for the consolidation to happen. So, oh, actually, dude, do I still have a position here? I think I took it off. I had a very small position. I don't have it anymore in Tesla. But it wasn't even Tesla. It was like TSLL. And I know that's leveraged Tesla, but it was still small. Like, it was really small. Okay, so somebody had mentioned Rio. Explore mining, processing. So miners went for a run already. So this one has not. Which is, when I think about that, I'm like, is that concerning? Right? Because a lot of miners, I don't know what exactly they mine for, but a lot of miners already made a run. So if this didn't run with the miners, if the miners all of a sudden start to take a break and fall down, is it going to all of a sudden correlate back down to the downside? Overall, if I'm just looking at this as is, price actions are getting tight. And it's kind of into this pivot. So it doesn't look bad. at all. It looks pretty darn good. But I would just state that, yeah, 65 would be the key pivot. You'd have a pretty ideal level of risk right here. But if the miners start to fall off and this goes down with it, that means the relative strength is going somewhere else and not over here. And I don't know why, because I haven't looked into it enough. But I guess this is a little bit different than gold miners. You got iron ore, aluminum, copper, mineral. So I guess it's a little bit different. It does mention, okay, engage in mining of copper, gold, silver, and other byproducts. This is a huge company. So just from a price action perspective, I'd be looking at this consolidation here and that main pivot at about 65. Okay. VALE, is this another kind of miner? Or what is this? Iron ore and nickel. Extracts, produces, distributes iron ore, iron pellets. Okay. Doing good. It's at a new year-to-date high. Higher lows. We're kind of at a point where you might want to see a little bit of a consolidation. The 200 days starting to turn back over. So yeah, I'd be looking for reconnects and consolidations, whether that be later, earlier, whatever the case is. I'd be watching to see how these moves get digested. If you're already in this, I wouldn't know where you'd be entered in. Maybe perhaps on this breakout kind of area over here. But yeah, once again, good looking setup. We're at a new high for the year. That's positive. Would I enter a new position right now? No, I'd be looking for pullbacks and then strength thereafter, or some sort of a base to build. Nike. I'm checking in the markets really quick here. We're down. We're pulling back to the 5-day moving average over now. Remember SPX, we were looking at 50, 65, 90, and we're right there right now. NQ is breaking a new low. I'm going to go ahead and pull up the tick chart to see if there is any opportunities within a shorter term trade here. No extended reading whatsoever. I'm talking minus 1,000. However, coming down to 65.90, I don't like how it's doing. Like it kind of we kind of moved on NQ already there, but I can potentially see this cooling off in and around these areas at least. Market net flow for the green line has been coming down. Red line kind of picking back up. Not the greatest sign. SPY 656 is in. 656 is down here. Last week's close is still right here. I'm tempted, but also maybe perhaps hopefully we get kind of like an undercut flush out a little bit stronger than this. And then maybe I would look to just execute a very shorter term trade. I don't know if that's going to happen here though, given the context of this being a put wall, 65.90. So if we get under it, maybe it comes right back up, bounces a little bit, and then we get through it. Okay, here's the ticks moving actually a little bit lower here. So perhaps maybe that'll be my, if we can get under a minus 1,000, I'll go ahead and execute. Okay. I don't think it's gonna happen. I don't think we're gonna get under a minus 1,000 reading here. Prove me wrong. Let's do it. I'm not jumping to bite it quite yet though. So if I was tempted to take a position right now at that 65.90 and just kind of just play a shot here, I don't think I'd be using the NQ. I'd probably just do a micro and then trying to get the feel of it and try to build in if it goes lower. But I have NQs kind of loaded right now, so I'm just not bothering. I'm looking for kind of the bigger flush, and I don't necessarily think I'm going to get that right now. Let's see here. I want to bring up my OBS, make sure you can see what I'm seeing here. And this 6,600 is not necessarily the call wall, so just ignore that. That was the call wall. The call wall did move up higher. We can look at more names here momentarily. Yeah, we can pull up SMCI. I did talk about NVIDIA. TEM was in the trade ideas, or it was, I don't know if it was in the trade ideas. It was in definitely the tight list. We'll pull that up. MicroStrategy we can look at. I did talk about NVIDIA. We can pull that back up. These main names. Oh, Rio got bought out. I had to do some of the price tag. Man, perhaps actually. Oh, that's interesting philosophy. The geopolitical risk stuff always gets to me though. It's like I don't have a good grasp on all that stuff. And some snap. Okay, we'll pull out some of these. So we're bouncing from that 65.90. I was hoping we can get a little bit more of a flush through there, but it is what it is. Perhaps it'll come later. It might, but that was a decent area. Hood and Neo. Yeah, we can pull up Hood and Neo too. Zillow. Okay. So where did it come down to? We came down to about a minus 700 reading on the ticks on that move, which was near our lowest print. And I was just really hoping to get more of a flush. Unfortunately, it didn't happen. So if you manage to take it though, with like an MNQ or even an NQ, you got a nice little pop there, right? That's from 80, almost 20 points. And then 65.90, right? A few points here on SPX if you did that. This was a level we were watching basically for the majority of the day. And when it came down there, I still didn't execute. We can check out, yeah, gold I talked about already, but I can pull it back up. Rocket Lab, IYA, ADA. All right, well, we left on Nike. I'll keep an eye here. Let me just get through Nike really quick. Somebody had mentioned if I have a position. I don't right now. We have earnings not too far away. Overall, it ain't looking all too shabby, right? We're above the 200-day. It's starting to try to flatten out here. Price action is getting coiled up. The main pivot over here is at around 80. I was interested in Nike all throughout here. I was pretty vocal about it. And then we saw the nice move from there. So now I would prefer to see it prove itself and see some strength, the 20-day to curl back over, back above the 50-day, and get tighter and then go from there. And I don't really like executing new positions going into earnings. I'm going to go ahead and just mark off Nike, and then we're going to go ahead and look at some of those other names. Somebody mentioned like ADA. I don't know what that is. I'm not too sure. IYA, I felt like that was an acronym. Yeah, I don't know. Maybe. Rocket Lab, I do know. So Rocket Lab. Getting a little loose and sloppy. Looking to see how it tightens up. Still a good trend overall for Rocket Lab. This was its earnings expected move from earnings over here, right, on that flag. And then we've just been kind of like, whoa, broke down, whoa, broke up, whoa, 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 whoa. And we're kind of just like really kind of getting sloppy movement around here, which could be considered distribution as you're seeing some big volume days. So I would just say look for price to tighten back up and then see if it wants to continue on. But right now we're seeing just kind of like these distribution days that are kind of like, could be just shakeouts building a base before its next run higher, or it could be just something more going on behind the scenes. So at minimum, I would want price action to kind of coil up a little bit more into this base, which we're kind of seeing here. You said Zillow, new high today. That's not a bad thing. I wouldn't enter in at the new high right now or breakout. I mean, sometimes actually these are the best times to enter, just new breakouts to new highs. But for me, if I'm being more tactical and I like the volume over here where you see these spurts of higher volume as we're moving up higher, I just look for the consolidations and see how it tightens up. And then maybe we go test that 100, maybe even higher. Doesn't look all too bad as it's kind of breaking out through these highs. It's, at a new high today that it hasn't seen for years. This 100 level, though, seems interesting because way back when you saw a big breakdown from that level. So Hood and Neo. Hood still one of the stronger performers from a year-to-date basis. Consolidating right now. Above all these averages. Probably due for a longer-term consolidation, longer base. What I don't like is seeing the volatility expand like this. I hate this, where it goes up, you know, it's a pretty straight line, then it goes down, then it goes a higher high, then it kind of comes way back down. You're seeing these exaggerated, like volatility is expanding. So right in the short term, yeah, volatility is contracting, but it's within this pattern that's kind of expanding. So for me, I would prefer it more down here, halfway more to like the midline, then start to see proof of it kind of coming back up to come up higher. And then kind of come back up to like 130-ish area. That's what I would prefer to see it. I don't know if that's going to happen, but that's what I wouldn't like feel comfortable executing a new position. And if I did, where's my stop? My stop would be just right under here, 109, 110. It would be right at 110. Maybe you can give it some more room. But then if you give it more room, you got to really understand, like, is it going to make sense from a risk to reward standpoint as well? Oklo. And we'll do MicroStrategy next. Oklo, very strong. Nice consolidation. Nice breakout. You've even seen those pockets of good volume all throughout the year. Look for the consolidations. Once again, this looks like it'll probably hit 100. I mean, we're right there. Right, so if we can kind of pull back a little bit before hitting that, see how it consolidates, see how what volume does. Remember, this run right here that we just saw, look at the volume. Once again, supportive volume on the way up. Now, consolidate. If you consolidate here and volume kind of dries up, pay very close attention. You get volume contracting, price action contracting. It can be quite nice. All right, I need a sip of water, and I want to look back at the market here. Oh, my throat. Dry. I'm like, ugh. Went through a lot of names. Let me check in the chat. Fed cut is at 2 p.m. Well, the guess of the Fed cut, the Fed interest rate decision, I should say, is at 2 p.m. Eastern Standard Time, 11 a.m. Pacific Standard Time, 2 p.m. Eastern Standard Time. And then 12, 1, 2, yes. Yes, the 25 basis point cut is. Thanks for all the hearts, everybody, and thanks for the thumbs up on the video. I appreciate that here on the live stream. Is the higher probability, right? It's not me just saying it. It's what the Fed Fund Futures is telling us. Go to probabilities. Look at 400 to 425 for this date. It says 93.8, and then 6.2% probability of a 50 basis point cut. And the reason why I say 50 basis or 25 is because the current rate is at 425, 450. And then the 93% probability is at 400, 425. So basically, there's a 100% probability we're getting a rate cut. And the market, I don't know. I don't see Jerome Powell wanting to shock the market. If anything, it would be shocking the market in a positive direction, right? I don't think he's going to be like, I'm going to raise here, or I'm not going to cut. So yeah, it's going to be, and I don't think he wants to even shock it in a way of doing 50 basis point cut. But if he does, I am really interested to see what the market does because we just priced in. I think we priced in a 25 basis point cut in September already, just from what the market did. I guess we'll see, right? Look at all these hearts coming in. Thanks, people. We have 1,000 viewers right now. Holy moly. That's awesome. Twitch 18 over here. Nice. Will I broadcast Powell? Yes, I will be broadcasting Jerome Powell right here. We got him up. We'll be listening to him. I'll be listening to live stream news. Holy guacamole, right, MS? It's pretty insane. Look at all these like hearts coming in too. Like, what the heck? 1025 watching and only 3 likes. Yeah, what the heck? Hit that thumbs up, everybody. I appreciate it. Okay, we're gonna look at some more names here. Yeah, it's FOMC day. You get more attention on the FOMC day. Let's go back over to the markets because I am interested in still day trading. We're right there at that 65.90. I did not execute like I said I was earlier today, just because while NQ was pulling back in, I thought maybe we can see a little bit more of a snap and then see the tick chart get extended. We didn't get there. So yeah, I don't know. Nope, no sweat there to me, right? It's not a win. Did I miss an opportunity? Maybe, but did I lose? No. So it's the most important part. Okay. Should start a poll. See what y'all are thinking as far as, is the market going to respond positive, negative, or just flat? Let's start a poll. Okay. Will the Fed reaction be bullish? Wait, why does it say yes or no? Okay, well, I'll just say, will the Fed be bullish? And you just say yes or no. All right, let's go ahead and let's get an idea here. Let's see what everyone thinks. The poll is on YouTube. I don't have it on Twitch. We can look at PL, OMX, and Grind. Yes, we can look at those. GRND while we're doing this. GRND. Remember, the first thing I look at is trend. Declining 50-day. 200 days kind of flattening out. We are below it. So more neutral on the larger term. 20 days sloping down. We're kind of at that. So for me, I pass. But, if you think that this is going to pop up higher, it is consolidating, contracting here. So my stop would be pretty much under these lows. Now remember, weak stocks typically get weaker. Strong stocks typically get stronger overall from a year-to-date basis. We did bounce from these levels. So if I were to approach this, I'd say, yeah, if I buy it and go long, I'll probably be faster to take profits and move my stop up. Okay, that's kind of how I would look at that. OMX, I'm not too familiar with that one. I'm not much of a fan of these lower volume, right, penny stocks, but they do every once in a while present themselves as a potential to move. I don't even know why I have this on my screen. I don't remember pulling this up or looking at it. Could actually have came up on like a fractal scan, and that's why I had it up. But it is consolidating. It is, getting tight right over here. And it is holding these higher lows. So perhaps we can get through this. Maybe we see it pop back up to these highs. Once again, I don't really trade this stuff too much. And then PL. Planet Labs. This looks like it's doing just fine. I would be looking for the consolidations. So earnings reaction was very bullish. And now I look for the earnings consolidation. And then I look for the earnings continuation. Okay. So we're still holding above that 65.90. That is the put wall so far for the 1DTE, according to Gamma Lab. NQ is off its session lows, but we're not too far off of the session lows. We did see a couple higher lows here. What we can do is, as this is the current low and we're seeing some higher lows, put a volume weighted average price. So if you are going long right now, you'd be looking at this as your risk. And then if you want, maybe up to these areas for your reward. Up in these areas right over here, it'd be kind of like a 2 to 1-ish right around there. Okay. If you were trading NQ, remember it's still to the downside. Let's look at market net flow. Still no convergence, still no real edge there. So 66% say so far that it is going to be bullish. The reaction is going to be bullish for the Fed. 66%. You know what that means? It means I got to find a rocket ship. The press conference starts at 2:30 Pacific Standard Time, 11:30 a.m. Pacific Standard Time is the interest rate decision. So 2 o'clock is the decision. 2 o'clock Eastern Standard Time is the decision. 2:30 is the press conference. That's the meeting where people ask questions and he reads off the remote, the news or whatever. Ekin says it will be a sell the news event. I'm starting to think that the market might not do nothing. GMT time. I don't know GMT time. I know Pacific Standard Time. So I'll just tell you. So it's 10 o'clock right now. For me, 1 hour from now, 55 minutes, we're going to get the decision in 1 hour. 1 hour. Yes. Yes. 55 minutes. Correct. You're welcome, generator. MS Trader. You're goofy, man. Lucid is dead. Oh, you were talking about like that the electric car? That's all over the place. It's kind of all over the place, huh? Not really the greatest setup there. Oh, would it be bullish for gold? I mean, if we see yields, I don't know right at the initial reaction, but if we see after the digestion, dollar continues to fall and the yields continue to fall, that has been bullish for gold, right? Can you copy my trades and change commission? No, not right now. Hey, what's up, Colby? Could I imagine what the markets would do if he raised rates? Oh, brother. They would price out all these cuts fast. What? No, watch him raise rates and the market goes up higher. It's like, okay. All right. Ain't nobody calling for that. Am I full porting news? I'm not full porting news. We'll pull up Uber. Yeah, if the dollar gets strong, I think that they can put a pause on things. The 10-year yield goes up, right? That can put pause on things. Let's look at oil. I'm gonna just get this off my screen. This little setup there. It's not. I didn't take it, so whatever. But if you did, cool. Oil, right, was up the other day, and remember, oil is a great indicator and potentially leading indicator of what bonds could do. So rising prices in oil could tell us that yields can rise, right? Like the 10-year yield, there's a pretty tight correlation there. So that means it could be bad for bonds if oil starts to rise. And oil is dangerously looking like it can break out higher. So my initial thought is if oil starts breaking out, probably means that we'll see the 10-year yield follow suit. And if the 10-year yield follows suit, what's negatively correlated to that? Gold, miners, the market's been negatively correlated to that. Now, I think that these correlations can get jumbled on whatever Powell says. So we got to kind of see what happens through the digestion of it. And that could take a day. That could take a 2 day. And the market's still pricing in a bunch of risks still right now. I mean, $5 of expectations of risk still. And then to the end of the week, still $9.50 of expectations. That's plus or minus. And that's for the SPY. Plus or minus $9 for expectations of risk there. I didn't do VDE. All right, I'll look at VDE. I don't know what that is. Oh, an energy ETF. I mean, I looked at XLE and stuff. So yeah, I mean, this looks fine. I was pointing out energy names that actually look just like this. All right, so I mean, this looks like it's trying to break out. I mean, this looks pretty good, right? If you think energy is going to go higher, yeah, these names would be beneficial. So VDE, right? XLE. It doesn't look quite like that. There's a lot of exposure in like XOM, I think, in here, and CVX, right? Yeah, those are the two biggest holdings, XOM and CVX. COP, ConocoPhillips. All right, I think we showed OVV, right? That was kind of consolidating there. And then we talked about like Halliburton. I was just pulling names that haven't broken out yet. But I mean, look how tight this is. Like for me, like if I look at this, I'm like, I think energy is going to go higher. I don't mind starting a position right now and just having to stop down here. I feel like the market, I feel like if you know, energy is not going to be breaking out, I'll probably just get stopped out pretty quickly. But that's why I would do a pilot position and see what happens. I don't like how it's underneath the declining 200-day moving average. But then again, if energy is going to be breaking out, I mean, this is just a beautiful, beautiful looking tight here. So I would take this over and over again, right? Especially in positive trends. But if I get stopped out, I'll get stopped out a bunch of times, you know, looking at this risk. But there's going to be a time where it just like takes off and it'll make up for all those losses. And if it doesn't stop out a bunch of times and I get a couple good ones out of the gate, and that's great. I'll tell you what, here, I'll enter a position in Halliburton right now. Once again, I don't like the trend, so already it's going to be a smaller position. So I'll do a pilot position, and my pilot position is typically around 2 to 3%. So I'll buy 3% of Halliburton, okay? Let me go back to OVV. I might want to do OVV. Let me look at a couple other ones. Let me just check, because I did trade Oxy, and I did great there. Like, Oxy is already showing more relative strength, so I think my money would be better in something like this. But for the case of this, let's just do it because we can walk through of what that might look like. All right. Right. So let me go ahead and go into my account. So I want to walk you through how I approach this. Give me a second. Oh, nope. I don't want to buy that much. Okay. Dude, what? Why leave? Damn it. Okay, so there, I'm in. Okay, there you go. Boom, I entered Halliburton. Okay, so let me walk you through my thought process here really quick. Yeah, I went bullish Halliburton. It's just an energy name. I don't really have all that much energy exposure right now, and I feel like it'd probably been a better bet for like Oxy or something like that, or even Valve. Wait, is Valvoline VVV? Is that in the energy space? This one recently broke out. It's fine. So okay. So first and foremost, so I look at trend. Is the trend great? Long term, right, is not great. It's actually declining. Okay, so that already tells me one thing about my positioning sizing. It's going to be, no matter what, a pilot size position at most. Okay, then next I say, what about the short term and medium term? I look at the 20-day, the 50-day, those are sloping up. Okay, this can qualify at least for, you know, some sort of an idea for a trade. I look at the energy sector. I look at oil. Okay, yeah. Things are looking good there. And then the short term price action, we're seeing higher lows, lower highs, price action is getting tight. It tells me that, hey, risk makes sense. So where would I get stopped out at? I'll do my stop. I'm gonna do it 5% below this, 5.5%. So basically $1.24 per share. Okay, so my stop would be down there. I haven't said it yet, but that's where it would be. So now I want to kind of walk you through what this looks like in a portfolio, because I do this over and over and over again with pieces of inventory. I don't care about being right or wrong right now, because it's not like size to a point where it like worry me. So for example, if you trade a 100, okay, what time is it? It's 10:13 right now, AM Pacific Standard Time. Stop spamming the chat, please. The Fed meeting is at in like 40 minutes-ish, around there. The Fed thing. Okay, so if you trade, I'm just doing this for easy math, $100,000 portfolio, right? You can have less than that, more than that, whatever. If I say that I am doing a pilot position of 2 to 3%, we're going to just say 3%, say 2 to 3%. That means 2 to 3% capital is going into this name, which means what? What's 2 to 3% of $100,000? That's $2,000 to $3,000. We're going to go ahead and say $3,000. Okay, bam. So I am now executing $3,000 of risk, right? $3,000 of capital is going into here. Okay, so if I am risking now 1.22, right, or 5%, let's just call it 5.5% of $3,000. Bring out the calculators. All right. let's go 5%, 3,000 times 0.05. This risk right here, from here down to here, is risking approximately $150. So if you have a $100,000 account, remember this adds up and this adds up quick. So $100,000 in this account, and you're putting $3,000 at risk, but really you're risking $150 of that where your stop is at, right? It can break down lower, like it can gap down, right? I don't know. If it can gap down 50%, you'd lose $1,500, right? Okay, so you're risking where your stop is at is $150 at least right now. So what is $150 valued at 100,000? So if this one position loses, you're losing what? In percentage terms. Anybody? It's not 1%. 1% would be $1,000 of risk. I'd be looking at 0.15, right? So basically 10 basis points of risk. Right? So that's all that I'm risking here is about 10 basis points of risk given this context if this was your portfolio. Now, if it goes up and it doubles in 2 or 3, that means this one little position could get me 0.3% to that portfolio. Now, this is just one name, right? And this is just a small size pilot, right? You can see how this would be different if I went full size at 10%, right? It would be a lot different. I can lose 0.5% of my portfolio on one name and expand this out to 10 names or more in a portfolio. And the reason why I point this out is because if you want it, like some of the best traders in the world are known for getting 20% year over year for 20 plus years or 14% year over year. My thought is here, if you look at, you get 12 months for a year, 12 months in a year. And if you just get 2% a year and you're doing things like this, or 2% a month, right? And one of these stocks can yield you, 3 basis points. And all your goal is this. You don't need, you can lower the volatility and the headache of a portfolio, and you could still easily get 20% a year by doing it this way. Then, if you look into stuff like the Kelly method, right, of where you then you start looking into variance and all these type of things and beta, and where you can play bigger positions on bigger hands that you believe are going to work better. That's where you need a little bit more of expectancy and expected value. Hey, if you keep on spamming the chat, you're just going to be blocked. Here's your warning now. Okay, because I can't see other names come into the chat. Just so you know. Yeah, we'll go over gold. So there you go. So I have a little position there. Let me go over to Twitch because, hey, what's up, Barkster? Time him out. Yeah, I got to figure out how to do that first, huh? Oh, yeah, here we go. There we go. We found it. Put in user in timeout. I'm going to put you in timeout for 30 minutes. There, he's on timeout. And anybody that spams it like that crazy is getting on timeout. So I'm going back through my chat. I'm going to go ahead and time out Mohammed here. You said what time is it? Like 75 times. Putting you on timeout for 30 minutes. There you go. Appreciate the comments and engagement, but also that takes away from everybody else. So I'm not about it. Especially when it's like telling somebody to shout me out or something that you can look up online yourself. Like, don't bother us with that. Yeah, you can easily lose 20% at the same time. Well, that's the difference, Beef. So that's also, you're not taking into consideration market conditions, which is one thing that I do, right? So you're not taking into consideration that. And then the setups themselves already deliver a higher expectancy. So losing 20% managing risk like this is actually significantly more difficult because you're only executing when the trend makes sense and you're in the right market conditions. So the expected value and the expectancy of what strategy that I'm sharing, it's already higher. So to lose 20% doing this consistently and managing risk this consistently, very difficult to do. So in there, which most traders fail because you're going to have winning trades, most traders fail because they size up a position too high and too heavy and they let it go against them. So the majority of people that aren't successful traders, I bet you I can go through any year of their performance and say, take out your 5 worst trades all year and then tell me what your performance would have been if you excluded these 5 worst trades. I bet you they'd go from a minus 10% or 20% of their year-to-date performance to positive or to flat. And that's the thing, because a lot of times people think win rate matters. It doesn't matter. I have plenty seen traders that go, oh, I got 9 out of 10 trades right. Oh, cool, congratulations. And then they get 1 trade wrong and they blew up their account. That's the, gambler's, what do they call it? Not fallacy, reign of ruin, or what do they call that? Gambler's ruin, they call it. It's like a term. Okay, let's go look at the markets here. Still holding up on that little setup there. Still above 65.90. I know people are still asking about gold. Yes, I mean, it's still holding up well. I mean, I'd be looking for pullbacks, right? I wouldn't execute newly into here. It's probably going to have a decent sized reaction off the Fed, I would imagine, given the context of what rates have been doing and what the dollar's been doing. So, yeah, we'll see what that does. But yeah, gold looks. I mean, it's fine right now. It's bullish. We broke out. It's moving higher. If you execute a new large position up here, I mean, you just got to be willing to wait through pullbacks and consolidations, right? So I don't know your time frame. If your time frame is 10 years, it don't really matter if you enter here or down here, right? If you're going to hold for 10 years because you think it's going up to 5,000 to 50,000 or something, it don't matter if you enter in right now or later, right? So time frame matters. If I'm just doing a swing trade, yeah, I don't want to enter a swing trade up here after a big run up. I would have preferred playing more of a breakout or a pullback consolidation. So time frame matters. So you got to think of it in terms of that. But overall, yeah, the trend on the weekly is bullish, daily is bullish. It's bullish, right? Bullish and extended in the shorter term. Will the mortgage rates go down? I mean, the mortgage rates are tied to the 10-year pretty darn closely. Your rate is at 6.8, but it's a multifamily purchase. I mean, so I'm pretty sure the loans work a little bit differently. And what I've seen now is like some companies are incentivizing, they're doing incentives to bring rates down to generate business. But 6.85, that's like the average right now. Like you're kind of within that average. So if rates do go down and they offer you an opportunity to, refi, I would look into it, but I wouldn't worry too much about it like a day move exactly. Like, cause a day goes lower and if you're paying too much, it can go right back up. Right. And all of a sudden, you'd be just too engaged with that. The 10-year, Jim. The 10-year is actually most tied to the 30-year mortgage rate. Take a look. Look at the correlations. Promise you. They look at the 10-year, 30-year spread. The spread actually is a pretty interesting tool to use at. Where it shows risk and things within that market, but you'll see that the 10-year rate is significantly correlated to mortgage rates. No, Powell's not talking. Powell's going to talk in an hour, a little bit more than an hour. Uh, 72%, we're going to end this poll. 72% believe it's going to be bullish reaction. Now, by bullish reaction, do you mean that it's just going to spike up, but it's going to fade, or you think that it's going to close significantly higher? I would imagine that the bullish reaction means a bullish reaction closing higher than where we currently are. Yeah, Neo. Neo was on the tight list this week. Yeah, there you go. Neo's. So Neo, it was a trade idea here, and it was on the tight list here on this week. Great looking consolidations and breakouts. So once again, like I wouldn't be chasing up at these levels. I'd be looking for consolidations. But a lot of these China equities look pretty dang strong. So, you know, buying over here, you know, versus buying up here is a big differential in risk. Buying down here is a big differential of buying, you know, over here, right? Remember, this came up and it went higher. If you bought here, it went higher. So congratulations, but you spent most of the time getting sideways chopped up. So the better buy would be down here, you know, after the consolidation. Qs. Yeah, Qs are just kind of sitting around the lows of the day, right? They're kind of pulling right back into the 5-day moving average. Which is synthetic 5-day moving average right here. So on the 15-minute time frame, that's 130-day moving average, or 130 period moving average. A little bit of a positive divergence. Seeing a little bit of a relief, and this is happening why we came into the put wall for the day. We bounced from that area. Earlier, we were talking about how if it slips under 6,600, the higher probability would be coming down to here. I did not take a trade down here. And then NQ, MNQ, NQ, they're pretty much at lows of the trading session, but they're holding the low VWAP right now, seeing a couple series of higher lows as we're just really kind of consolidating right now, digesting the recent sell side, which has really been driven by some tech names. Market net flow, green line's going up, red line's going up. No convergence at the moment. Still positive on the week as we're kind of doodling around there. Russell 2000. Can look at the rut. Yeah, small caps doing good. I mean, small caps do good. I mean, there's a lot of energy names, a lot of, you know, regional bank type names in the Russell 2000. So, you know, it's holding up pretty well. Not too far off highs right over here, but it's at a new high from a year-to-date perspective. So yeah, just keep an eye for consolidations and so forth, and see what the Fed does. Right, the Fed, it's going to be, we got to see the reaction. But overall, all right, Fed out of the way. What does the chart look like now? It looks bullish. You get higher highs, higher lows. The 20-day sloping up, 50-day sloping up. Yeah, 200's flat, but price is above it. These are all, the market is bullish, right? The market's bullish. And even from a terms of gamma perspective, right, we're above the gamma flip line, which is way down here. Way down here, it's near 6,500. So dealers are still looking to buy the dip, sell the rip. Vol gets suppressed. So we got to see how Jerome Powell handles all of this. And as of now, we're still well within the weekly risk of expectations. MicroStrategy, Sol. Is Sol like a crypto or something? I don't know how to pull that up on here. Or is it that like the ticker SOL? Yeah, MicroStrategy. I don't know. It's not looking all too heavy, like too hot right here. Yeah, price action is kind of cooling up, but I feel like there's other names within the crypto space that might look a little bit better. All right. Once again, if you spam the chat, you get timed out. So timeout. There you go. And you're spamming the chat, so you get timed out. Okay, here we go. Are you saying Sol, like, is there the ticker Sol, or are you talking about like a the crypto? Because this is SOL. We're on Thinkorswim platform right now. That's why I said that. This right here, I don't know what's going on with this. I don't trade these like low liquid cruddy names. I don't bother with it. Yeah, okay, Sol USD. See, now Rocky's making sense now. I'd have to pull that up on TradingView, I believe, because I don't think that that stuff pulls up here on Thinkorswim. And I'm on Thinkorswim right now. Yeah, sold's crypto, but it's also, there's also a ticker traded SOL as well. See what I'm saying? Yeah, we can look at CoreWeave and Oscar. So Oscar, yeah, Oscar. Oscar looking pretty good, actually. So I was looking at it over here. I think maybe I traded a little bit, but I'm not in a position now. And now we're kind of pulling back. And actually, this last day had some decent volume, but it was also a down day. Ended up higher. And we're kind of pulling into that 20-day. And today, it looks like we're kind of doing an outside day, at least as it stands right now, on a pullback. So saw a nice, decent move up, decent volume, nothing too crazy. It's a little choppy and sloppy. But if you think that the healthcare sector, which we talked about earlier, is going to actually hold up, some of these names might be those higher beta names that can come right back up to these year-to-date highs and potentially break through. So for Oscar, yeah, I mean, this looks like a decent pullback after a nice move higher. 50 days flat to sloping out because price is above it. 200 days flat. But if we can hold above these things and above these areas, these can start sloping back up, and it could be quite beneficial. Kava, you know, I'm not a fan of a lot of the restaurants right now. And we're basically at new lows for the year. Remember, weak stocks typically get weaker, strong stocks typically get stronger. So it's a little bit, a lot of these kind of names are not on my radar anymore until I start seeing relative strength. Like Chipotle, once again, got beat. What are some other restaurant names kind of like this? Like Wingstop, right? Wingstop has been getting cracked. Shake Shack, right? Been getting cracked. A lot of these restaurant names, I'm not really too like, I don't really like how they look right now. So I'd prefer to see some relative strength come back in before really executing into any of these type of names. So CoreWeave. CoreWeave doesn't look all too bad here. So let's go ahead and just go activate this trine. Take a look. So CoreWeave, it's not too bad. You know, I'd say that CoreWeave could be something to really keep a close eye on. Price is consolidating right at this trend line. The 50-day is sloping down, 20-day slope trying to slope back up. So if we can stay within this tight consolidation and it breaks out, awesome. But if it breaks down, you can basically be like, all right, well, I'll be out. I mean, you could just say low of day to day. That's, keep in mind, that's 6%. Just the low of day to day is like 5%. So if you go full size position and you know that like right here is 5%, like you're going to lose 5% on that. There's a high probability you get stopped out. If you go down here, you're looking at minus 14%. Now, looking at this chart specifically, that would be fine. So the thing is, though, you'd have to make sure your position sizing is beta adjusted, volatility adjusted to allow for it to move. Now, if you want your stop way down here because you think we're going back to these highs, that would also make sense, right? So, because look at, right, that would give you a lot of room, and then the risk to reward, right, just up to here would be almost a 2-to-1 reward risk ratio. And you, if it breaks out, you can always move your stop up higher and get the confirmation or build within here and, you know, do things your way or how you see it fit. But at least if it goes down here and you lose, you know, 30% on the trade, you might be like, if I told somebody that I lost 30% on this trade, they'd be like, oh my gosh. But what they wouldn't know is like, it was probably smaller than a pilot position. So it didn't have that effect on my overall portfolio, right? So it gets distorted. Like a lot of people I say, I got made 400% on this name. It's like, okay, yeah, but you had what? Well, how big was your position relative to your portfolio? Or they, you know, they say they lost, you know, 50%. Like, well, how big of a position relative to your portfolio was it? It was 100%. Oh, okay. Well, you lost half your portfolio. Congratulations. That's stupid. We got about 30 minutes. Let's hop over to Twitchy. All right. So if you played this little thing where you're trying to hold that that VWAP from the low, it came into that area. So cool stuff. We talked about that one a little bit earlier. It's holding the today's low. We're kind of just releasing some of that sell side pressure. If we start moving higher, pay attention to the daily volume weighted average price. Okay, if we start heading up higher, if I look at market net flow, we're starting to get a little convergence here, but it's still, you know, kind of choppy, kind of all over the place. Nothing really too clean. Let's take a look at ticks, see if we got anything from a tick perspective. No. Nothing. Market's kind of just on pins and nails, waiting around. GRRR. Let me see. Gorilla. I was looking at it over here. It didn't break out though. Well, I guess it broke out right here, but then it just would have been a stop out. It's like one of those names that are kind of just like, is it in play, is it not? So it's like it's up 11% today, but I don't like. It's just not clean from a technical perspective for me to trade. So it's one of those names where it's like, hey, is it in play today? Oh, you know, it is in play today, but it's also kind of outside of its expectations. So I don't really waste too much time on names like this unless if it really, really does start to make sense from a risk to reward standpoint. And at the moment right now, for me, it doesn't. Like I wouldn't, like, it wouldn't bug me if it goes up to 30 bucks. Like, wouldn't care, right? Like I want something that fits my criteria. And this it's just not right now. It's just not, it doesn't fit my criteria at the moment. These are like, hey, can I catch a squeeze somewhere sort of type names. Tesla's still consolidating its big run up, holding up pretty well. AVGO, let's see here if it didn't quite get down to its 2 standard deviation move. Assuming neither did NVIDIA. Yeah, look at NVIDIA. So it came down, like we talked about its 1 standard deviation move earlier and how it could come back to daily VWAP. It's doing that right now. NVIDIA came back to its daily VWAP. It's 2 standard deviation move. I put an alert down here just in case, for whatever reason, if it came down to 2 standard deviations. But we're just right there in that eyeball range, which is beneficial. We get above the daily VWAP and we start moving higher here. I mean, guess what's going to happen? You're going to see NQ continue too, coming up to its daily VWAP. Coming back up to that 6,600 strike. On strong moves like this, it's always worth checking out tick, see what happens if it does get extended. It's not even close to being extended right now. Watch to see if we get a reconnect with daily volume weighted average price with NQ over here. Yeah, we can look at open. We did look at RR. The British narrator. Let me bring up the British narrator. There, we'll bring up the British narrator. At least I think he's still the British accent. And Q making its way back up to VWAP. You think it's going to pump? I don't know. For some reason, I feel like it will too, but we'll see. We'll see. I'm not. So as far as where I'm leaning, as far as where the market's going to go with Powell, my lean is towards it pumping just because, but I'm not going to actually position myself for that. Like, I don't care to gamble on that. So my positioning right now, I mean, I am technically long the market, like net long, but I still reduce size. You know, I'm not gonna change that. We'll look at Dow, yeah. So there's the tag of the daily volume weighted average price. So we made our way up there. NVTS, could you do it NVTS? Yeah, NVTS I did last night on my market brief. Oh no, not NVTS. I'm getting it confused with something. And what was the one on the market brief? It was a financial, not this one. I mean, showing some strength here, right? It's kind of like in this channel, but also wedging. So anything below today's low, I'd probably get out. If you're long, right? If you're long and you're playing this little breakout, yeah, I would probably have a stop under today's low or right under here. So I'd position, if I was bullish and think it's going to go higher, I would adjust my risk based off of those areas for stops. Right now, where is it at? I mean, this thing is screaming right now. So personally, I don't like executing here at a move like this outside of the vol range and everything. If I'm being a little bit more technical as far as like entries. BE, yeah, Bloom Energy. Yeah, this has been on a run. I think this was on the trade ideas or tight list at some point, probably more down this way. I can't really quite remember. Big move here on Bloom Energy. Once again, things that I would not be chasing, but I'd be on the radar looking for consolidations and so forth. Here, I'll check out Solana. What is the ticker on here? Is it SOLUSD? Yeah, I mean, it looks good. You get a series of these higher lows. Price action was contracting. We broke out, and now we're consolidating again. Yeah, it doesn't look bad. I like to see the big sailor to shift tool actually start to tick up. So as long as Bitcoin and that kind of flips over, I mean, it doesn't look too bad right now. Right? You go back. The main area was right here. Kind of just this consolidation, and we're breaking out. This is a 2-hour chart, so I'm not bothering with the daily time frame on that. Okay, we're kind of back right now at 6,600. And we're floating around daily VWAP. Just currently above it. Gold, yeah, I talked about gold like 17 times today. Gold, still doing really well. Frothy, yes. It's going to have to consolidate here at some point. Right? So whether that's up here or where we are now, it's going to go through a period of consolidation. So if you're entering new positions right here after already where price came from, you're going to have to just deal with some sideways movement some point in the future. Like, for example, like when we saw this run up here, it went sideways for how long? Went sideways for 129 days, 92 trading days, 129 complete days. So yeah, there's going to be periods in time where you're going to go sideways. So as long as you're fine with going through consolidations, you're good, right? At some point, I don't know whether that's going to be here, 4,000, wherever, but you are going to, when you enter here, there's a high probability that you'll be trading lower, you'll be trading higher, you'll be trading lower, you'll be trading higher, and it's going to go consolidate before it tries to run. Now, if you're looking at this in terms of just a longer term thing, once again, tell me your time frame. Is it 10 years? Then it probably doesn't matter. You just set it and you buy into the position on dips and you hold it for 10 years. Like, it doesn't matter as much. $4,200 for gold or for S&P 500? I didn't do UPST. Let's do UPST. Upstart. So this is the little consolidation that I'm seeing right now. Kind of have these matching lows. So in short, when I look at this for upstart, what do I see? I see that the bears made progress here, and then the bulls stepped in, right? Bulls stepped in. Then the bears made progress here, and the bulls stepped right back in. So in short, these lower highs are telling me that the bears, they're making progress, but yet the bulls are saying, not today. So in short, this is giving us this contraction that we're seeing right here. Bears are making progress, bulls are not. Bears are making progress, bulls are not. So if the bears give up, bam, we start to see this thing take off. If the bears step back in, or the bulls going to say, not again, we're going to break you up. So it's all about who tires out here first, and that's what you're getting that contraction for. So for me, right now, if I would say I'm going to enter right now because I'm speculating that the bulls are going to win here and we're going to take off, where would your stop be? Your stop would be underneath this camp, because all your bulls are kind of hiding out at this camp and they're stepping back in. So I want to like use them as my frontline defense and hide over here, because if price were to come way down here and then they do this, I don't want to get stopped out. That would be my best defense. But if I enter here after a strong move up, is there a strong probability of coming right back down here? Yeah, absolutely. We're a day separated. Over here would be minus 11%. So if I'm executing in this position, what would I be okay with losing 11% on? A full position, a half position, a pilot position? And if you want to be more patient, you would look for more contraction after this kind of run up and then go from there. And overall, you'd want to see it break out through these levels. Okay. So it is contracting, but the bears are stepping in here. So now the bulls just got to say they're going to win, they're going to take over, and they're going to take out one of these bear fortresses like these camps right over here, you know? This little bear camp hiding out over here and hiding out over here. Look at app. Yeah, we can take a look at that. Let me take a look over here. Hey, good morning, AW Bays. Do I trade stop step? I do have some top step accounts. Am I prepared for Powell to not ease? I mean, I'm prepared to do whatever he wants to do. Open. Yeah, some people have been mentioning open. Yeah, open's been squeezing higher and higher. Good in-play stock. I mean, if you're entering a new position up here, that's some scary grounds over there. This is pretty volatile. I haven't done any solar, and I also nobody mentioned cannabis names, which I find very interesting. Not a single person, I don't think, mentioned any cannabis names, which is
just want to be aware of out of the UK. FT is reporting UK talks to join e-defense fund stalled over participation fee.
Yeah, so Sunrun looking good. I mean, nice big breakout, but here's the thing. This big move also is coming on the back of like a falling yield, right? If rates go up higher, now interest rates are supposedly coming down, which could be beneficial for these type of solar names, right? Solar names, there's a lot of debt. So are they front running lower rates? And that's kind of what we might be seeing. Here's TAN, it's a solar ETF, and it's been kind of heading higher. A little sloppy, looking for consolidations, but they have been showing some strength there. Darth. Alrighty. We got about 2,000 concurrent viewers. We got about 10 minutes here before the Fed announcement comes out. Powell is going to be speaking here in 30 minutes. We have the video locked and loaded, ready to go. We hit daily volume weighted average price, the VWAP for the day, and we're kind of pulling in here on NQ. We're still below the 6,600 net gamma strike. It's no longer
10 minutes
call
now
wall.
until we will be seeing the latest FOMC rate decision and summary of economic projections. The Fed is expected to cut rates by 25 basis points, taking the target for the federal funds rates to 4 and 4.25%. The vast majority of those surveyed by Reuters do expect a 25 basis point rates cuts, although do note that 2 out of the 107 surveyed do expect a 50 basis point move. Meanwhile, markets currently only price in a 50 basis point cuts with a 4% probability. We'll see the updated summary of economic projections with a lot of focus on the 2025 and 2026 dots, while the longer run rates will be gauged to see if the FOMC's median view has increased. Within the statement, any potential change or lack of change to the forward guidance will also be key. Just a reminder, the FOMC currently states that in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Do you know, ING did suggest that one option is to change it to, quote, in considering additional adjustments to the target range, which would send a more clear signal of rate cuts ahead. Meanwhile, the vote splits will also be interesting to see how many of the doves do opt for a 50 basis point rate cuts, and also to see what the latest Fed appointment Mirand votes for in his first meeting at the FOMC, or also potentially if any of the voting members did prefer to keep rates on hold at this meeting. In terms of the order of squawking, we'll of course lead with the rate decision first, and have a look at the dot plots, then have a look at the statement to see if there's any changes made to the guidance and how many dissents there were.
So initially, what I'm going to be doing here is I'm going to be looking for tick readings that go in either direction and kind of gauging it from there, from being extended or overextended, oversold, whatever. And then what we'll do is we're going to be anchoring in on the time that the market's released, and then also the press conference to get an idea is the market trading above that anchor where all that volume initiated with all those algos, or is it going to be trading under it? So it's the initial kind of reaction, because a lot of the times when you get your first tags of those, you get your biggest shifts from those levels, and they can create some opportunities for the shorter term traders. We went over plenty of swing trade stuff today, different names. We got now 8 minutes. I'm going to take a quick break, refill with some water, maybe some energy. NQ, not well off the lows, but well off the lows in a sense. It came back to test daily volume weighted average price, and now price action is just consolidating that, and we're still above the daily VWAP right here for the low, the daily VWAP low. Okay, so we're kind of compressing within this, kind of wedging. Did I do NVIDIA? Yeah, I looked at NVIDIA. Some of the news is bringing it down today. I mean, it's still overall, bullish. It's getting a little top heavy. But I really got to see how the market digests all this information and then see how things tighten up. All right. I checked Solana already. We can look at CCJ. He did not announce the cut, so we got 7 minutes. 7 minutes. I'm going to take a quick break before the Fed stuff. Be right back. And then I'm also going to bring this up right now so you can see, keep an eye on just market net flow for right now. So these are the main key levels as of right now, the 5950, 6600. We're currently below it. It's not the call wall, but it's still a prominent strike. And then I'm going to hide myself really quick. And I'll be right back. The press conference is at 2:30. The Fed interest rate decision is in 6 minutes. Okay, I'll be right back. We are back. Scooby doop doop dooby doop doo. Here we go, everybody. We got 3 minutes. We're going to get the Fed interest rate decision. Probabilities of the Fed rate decision is pointing us to a 25 basis point cut. We'll see if it comes in as projected, if it comes in more, less. See if Fed Jerome Powell wants to shake things up or not. And then we'll go from there. As it stands right now, S&P 500 is at the 6,600 level. Basically spot on to it as this announcement's happening. So right back up to its previous call wall. I haven't updated that yet. Still an important gamma level if we're looking at net gamma. 6,600 right here. So below it, right, can get a little shaky, but still overall very liquid environment, well above a gamma flip line. And as far as NQ goes, we are currently at its daily volume weighted average price as this is coming. The bulk of everybody did a poll and they said 70% believe
the rate decision and have a look at the dot plots and
that the market's going to react positively to the Fed interest rate decision. That's what the 70% of the audience said. So if it goes up, I can be in my pineapple or I can be in my rocket ship. Should I hop in my pineapple or rocket ship right now? Let me know. Ticks are getting up there. $2,400 concurrent viewers. This is a big stream here. Market now is starting to rip a little bit higher in anticipation. Maybe some of the shorts are covering. 10 seconds to go. Here we go. We're going to put on a anchor VWAP when this does take place. And there is the reaction.
So we cut 25 basis points as expected. Seeing the end 2025 dates. It's at 3.6%. Previously was 3.9. So end 2025, 3.6%, down from 3.9% previously. End 2026, 3.4, previously 3.6. End 2027, 3.1, previously 3.4. It also sees 2028 at 3.1% in the new forecast. For the longer run, that's seen at 3%, maintained. So it does lower the dot plots, sees more rate cuts.
They see more rate cuts on the dot plot. So initial reaction positive. Let's see how it digests.
Additional 50 basis points of cuts by year end and another 25 basis points of cuts in each of the next 2 quarters. So have a look on here. Miran did dissent, favouring a 50 basis points cut. So do note, Waller and Bowman, they did vote for a 25 basis point rate cut, but Miran did vote for a larger 50 basis point rate cut.
Did hit a pretty extended reading there, but won't trade this right off the news. Maybe look for an extended
Just
to the
downside. Through in the statement, it does note it is attentive to both sides of the dual mandate.
Back to
economic growth moderated over the first half of the year. Job gains have slowed. Unemployment has edged up but remains low. Inflation has moved up, remains somewhat elevated.
Be mindful of spreads when this happens. You get wider spreads. Market calms down, spreads will get tighter. We're currently underneath the VWAP from the announcement. And we're back at daily volume weighted average price.
Statement, it does note, it does judge the downside risks to employment have risen. Unemployment rate has edged up as well, and job gains have slowed, it adds in. And also notes inflation has moved up and maintains it remains somewhat elevated. So sort of a mark-to-market view there on the description of the economy. And in terms of the guidance, it does drop that extent and timing language. So in considering additional adjustments to the target range of the federal funds rate, that is a new clear signal of rate cuts ahead. It does drop that language of the extent and timing of additional adjustments, just stating in considering additional adjustments.
Trying to get back above the VWAP from the announcement. If we can get above that, I'd just be watching this opening range. This is the first 30-second opening range of the market. Coming back up there would be quite the move, right? From 480 to 520, be 40 points. All All right, we're above the VWAP from there. That's a positive sign. You don't want to get below it. If you're bullish, you want to hold above it. We're getting back up to another frothy tick reading. The longer, if we can consolidate up here,
So
very
look
bullish.
at the breakdown of the projections.
But when you get up into these readings, you can get some
do show that
fades
9
too.
of the 19 officials see 2 additional cuts in 2025, 2 see 1 cut, and 6 see no more reductions. So again, the actual split there of the dot plots is quite mixed. But again, 9 of the 19 see 2 rate cuts in 2025 further on from today's one, and 2 see just 1, and 6 see no more reductions.
FOMC starts in the press conference starts in a little bit here.
So again, quite split dot plots there. Just would take one of those dots that does pencil in 2 more rate cuts to
coming to the bottom of the opening range right now, the first 30 seconds, and going to where the market opened up. The market opened up right here on this session. So this right here is the 30-second opening range, is blue line. It's kind of hard to see. Still very, very large moves. So volatility is wide, right? Volatility is very wide, so you got to be careful. And if things start to slow down and calm down, there's going to be some opportunities in this volatility. We are still trading kind of a high tick over here, which is not a bad thing when we stay up here. On a hold, remember we said if you break above this, it can go 40 points or so right to the opening range, and that's where we got to. So the next stop would be opening price on NQ in the opening range, and then you can be more bullish if you're actually kind of above the opening range, which we're not yet. We're not there yet. SPX is at about 66.24, 66.25. Let's look at 1DTE, see how that shifted.
Just to recap that FOMC rate decision, overall pretty
the
dovish.
call wall for the day.
Really upside in treasuries, upside in stocks, and weakness in the dollar. So just to recap, did see that 25 basis point rate cut as expected.
It's at its main
there was only one
DTE
dissenter this time. This was Miran. He did opt for a 50 basis point rate cut. Meanwhile, the dot plots were all revised to show more aggressive easing ahead. And in terms of that guidance, they did drop that language of considering the extent and timing of additional adjustments to just change that to in considering additional adjustments. So again, another sign of clear easing ahead from the Fed.
Clear easing ahead for the Fed. So gold's just unchanged on the day, but did see a big spike. Let's take a look at silver. Nice spike there in silver. Let's take a look at bonds. Let's look at the yields actually. Down big on yield. So that's not a bad thing here for the markets as we're seeing the response. And then dollar. Let's take a look at dollar. Dollar breaking down further right here, which is also not a horrible sign for the market. So we'll see if this can hold up. Right now we're fighting the opening range here on NQ. Market net flow. Look at this market net flow. Boom and boom. This big dramatic move here. We did get convergence a little bit ago.
It's also just worth having a look at the rest of the summary of economic projections. In terms of the unemployment rate,
daily implied move is still up here.
2025, that's
right
maintained
here.
at 4.5%. 2026 was actually revised down to 4.4% in the medium view, with 2027 at 4.3, down from the June projection of 4.4. Having a look at growth, 1.6% revised up from 1.4, 2026 revised up to 1.8 from 1.6, and 2027 revised up to 1.9 from 1.8. In terms of inflation forecast, 2025 medium view 3% for the year end. As also maintains. 2026 was revised up to 2.6 from 2.4. 2027 unchanged at 2%.
Dollar getting
and
hit
core 3.1%
hard.
maintained for 2025, and revised up in 2026 to 2.6 from 2.4. But again, 2027 maintained at 2.1%.
All right, coming back to the VWAP from the meeting, it'd be better if we held it. And we're kind of just back within that 66.20 kind of call wall for the 1 DTE level. Still some very, very large moves on a 30-second basis. So if you're overly excited bullishly, I wouldn't be too excited. If you're over bearish, I also wouldn't be excited. Let the market kind of calm itself and digest. We're basically unchanged since the announcement. And we got him coming up in about 25 minutes or so. No trades taken for me on this. Not yet. Daily VWAP, and then the daily low VWAP is right here in this area. You want to hold this. That'd be much better if we can hold this level, these areas right here. For NQ, that is. That's about 438, 450, right in that range. Why the market dump? The market's just digesting. I mean, it's dumping because it just shot up, right? It's just all digestion. And then remember, we still have Powell coming up. He's going to be answering questions. We got all of that funness to take place. We get an initial kind of algorithmic type response to the report. Then you get people to dissect it. You get the digestion. And we go from there. This area, we started getting some pretty extended readings, right, at about 11:05. You can see over at 11, like right here at 11:05, on those extended readings, the market's just breathing, right? You get kind of capitulated to the upside. It has to breathe a little bit. And the same thing goes to the downside. If it comes way down here, probably see some very similar type price action. Sheesh. Hold on. Okay, no, that's not for me. Okay. Yep, we're doing a 25 basis point cut. People are asking about gold. Gold's a hot topic with a lot of people right now. Gold's running. Gold's running on the back of a fallen dollar and probably a falling yield from my understanding here. So if I go to dollar, yeah, look at the dollar. The dollar is absolutely falling out of bed. Very, very like bullish there for gold. And then let's take a look at yields. Same thing. Boom. Fall. That's a big move. Kaboom. Do I have a bookmap promo code? I think I do. It is try BM20. That's monthly plans. BM20 you can try. All right, NQ coming into that area where we have the daily volume weighted average price and then the low. Still digesting this move with Powell around the corner. Boom, boom, boom. For me, I'm just waiting it out. There's some big moves right there. Okay, so I want to go back over to the tick chart. Come on, let's see if we can get some extensions. No, that is not dramatic at all. Hey, it's just not happening right now. Thoughts right now? Well, we're underneath the average volume price from the announcement. So thoughts right now, it's not positive. If price action, once it starts to calm down a little bit here, I'll get a little bit better sense. But right now, I mean, you're seeing to see things like gold run up. Let's take a look at oil. Is this getting hit, clipped? Yeah, oil is coming down a bit. Not by much. It's kind of relatively flat, but a big reaction in the dollar. Big reaction in the dollar. So let's see how this one kind of resolves itself too. But that's really helping the pump there on gold, silver. And then as far as tech goes, and we hit the low here, so maybe even anchor a volume weighted average price of this just to see how it might react when it retouches. So this area right here, if we bounce back, we'll see how it kind of interacts with this level, which is 40 points higher. But you're now below daily VWAP. You're below the low for the day VWAP. Not a good sign. So what I like to see here is this selling. I don't mind this, but I don't know how low it's going to go. So I use the tick chart as a barometer to help me try to execute at the most pristine time, and that means I need to be down here, and I'm not there yet. I'm just not there. So we'll see what that looks like if we can get down there. Now, a lot of the time today, it was right around this area, minus about 850. So that could be potentially something to watch there, but I don't know if I'm really willing to do any size without a full extension yet. So I'm waiting. Okay, we're back at the 6,600. That's a pretty key level on the SPX. See if anything's changed here. There's some moves happening. Now we might be getting it. Now we might be getting extended. Let's see here if we can go just a little bit more. This was like that key level there. Little bit more, and then we can get a kind of a full out flush where, you know, that would be to me more of a capitulatory type move where we can see a little bit of a bounce. I'm not willing to execute right yet. But man, it's close. And for me, I'm not like also looking to short. I would be looking to just fade, to do a quick fade. This thing is coming in right now. Perhaps we go back to 65.90 again and test that. The tick chart, it's not extended, so I still wait. Now, if I looked at the tick chart for the NASDAQ, that might be a different story. But for me, I prefer looking just at the NYSE tick chart. So once again, if you were like, I'm going to buy the dip because it's going to bounce, like, you're getting fried right now. Fried. That's why it's so important to be patient and understand, you know, these tools. They can help you be on the right side, or at least execute at. There we go. There's 65.90, and this thing is, oh man, it's like right there. That's the area right there. Probably could have done something there, but we'll see. Give it some more time, I guess. I'm probably going to miss it. We had 65.90. We didn't quite get the extended reading yet. Let's see here. We have Powell up in about 15 minutes. Trying to be patient, getting a little antsy. Good. I mean, it's fine. It's normal. There we go. There's a break lower. Here we go. We're getting into the 800s. Let's go a little bit more. That's the lowest tick reading of the day. So if I were to start a position, it's going to be MNQs. It wouldn't be the NQ. But
Again,
that
did initially see upside in the equity space, but that has now paired, and we are now moving
really
lower.
wish we saw the minus 1,000 though.
You know, it's also just coming off highs, bear in mind.
And there we go. Here's a minus 961 reading. And then now I'm going to go ahead and try to execute one there and see if we can do anything with that. Oh no, did I get it? Mother of goodness, I only got on one account. I'm up $490 right now, and I'm out. Boom. That was one NQ contract at pristine execution, ladies and gentlemen, because I waited for that. Beautiful. That's what I call execution like a pro. And it can go higher, but take a look here. Bam. I made $500 plus, right about $500 on that trade, on that very quick execution, which brings me up to $1,300 on the day, waiting patiently. Now, if I would have got my full trade off, it could have been two, and it could have been on two separate accounts, and I could have left a runner on, and I just did not get it fast enough. I pressed the button, but unfortunately, it didn't happen. So it is what it is. Now, if it happens again, I can redo it. But what I prefer to see, if we get an extended reading while price comes down here, I would actually not do it. I would want to see the low broken. But man, that right there, I wish I had a runner on, because this type of move with that final perfect execution, it would allow me to keep a runner on. And unfortunately, I didn't get it off. Sheesh. Man. That's 60 points from that low. Maybe even more. Look at this. 93 up to 61. I mean, if I had that runner on, it would be wonderful. So now, if price wants to reflect back up, look at all this confluence over here with all these VWAPs from the announcement, from the daily VWAP. We got now Powell in like 12 minutes. Man, I wish I had a runner on. Unfortunately, I got one contract off. I said NQ is what I meant, Linda. NQ. N as in Nancy. I will smoke one of that. Hey, thanks, Metalia. This stock is, this is actually, I'm trading futures. I'm scalping futures here. This is NQ. This was NQ scalp. Okay. S&P 500 is still under that 65.90. Let's see if anything changed here. It's still the main put wall. We got one tag under that, which was just a brilliant, like, man, that was just it, that you got to see it live. And we, you know, unfortunately for us, this strategy that I've been sharing and using, it worked very, very well. And it does work very well at all times, but you know, the time series it works best when you're in negative gamma over here. So this is when I took advantage of prop firms doing this strategy where you get more tick extended readings. Here, we've been all positive gamma. This is more swing trading, you know, and if you're day trading, you have to be very meticulous, but you don't get this type of strategy occurrences very frequently unless if you have what? News events and all of a sudden random daily volatility happen. So you get a lot less here happening. So I'm glad we can at least take advantage of it when it's here, but you get a lot less readings in today's market being above a gamma flip line. And that gamma flip line, just so you know, is down here at about 6,500. Man, I am bummed out. Not only that I didn't get a runner, but on my other account, I clicked over and I hit buy, but sometimes if you're doing two separate prop firms, you have to click it twice so it registers that you're on that screen. And I missed it and I did not want to chase it. So that's okay. There'll be more opportunities. There'll be more opportunities. That move right there, Michael, was the look at utilizing tick chart. Doing it live. We'll do it live. Am I still doing phrasing? I don't quite understand phrasing. What did I say? I don't know what you mean. What is phrasing? M as in Mancy? Wait, what are you guys talking about? You're tripping me out. Y'all tripping me out. All right, let's take a look at market net flow. The green line's coming in, red line's going up. Still not necessarily full bullish or bearish or bullish really at that matter. But as this is happening, this could be, I was just gonna say it, but I already broke down, somewhat flagging into these key areas. We do have Powell around the corner, 10 minutes. So once again, just waiting it out, playing extended movies. Phrasing is an Archer reference. Oh. You linked your broker account to it somehow. To what? No, I'm looking at Thinkorswim, but I'm trading on a different platform. The tool that I'm using is on Thinkorswim. It's also on TradingView, I believe, but I don't use it there. I use it on Thinkorswim. I didn't have a stop loss PL. I was going to let it go. It's very rare. It's very rare. If I come down here, I'll just look at the dollar amount at that point. Because if I get under minus 1,000, the probability of it bouncing in and around these areas are high. So if it doesn't, I'd be looking at maybe like 500, maybe a little bit more of a loss that I'm willing to take, given the context that it's a higher win rate, if that makes sense. I typically do this with MNQs. Today was an NQ. And if it was an MNQ, I probably would have it preset as more contracts to go, and then I would have had the runner. But I did only one NQ because that's all it fired off at that time for me. Boo-hoo. Now, we're just kind of holding up, consolidating here. Raw dogging. Yeah, I mean, I'll exit if it gets too hot, like, right? But to throw a stop on while executing at that speed, like, it almost needs, the stop has to be like automatic. And I don't know if I can do that via copy trading. I haven't looked into like the DOM like that yet. Oh, got it, PL. I don't have shortcuts for buying and selling. It's not set up right now. Remember, I'm using a prop. This is a prop firm that I'm utilizing for this fast trade. So I'm market in, market out on a move like this. It'd be different if I could swing trade.
You know, in 8 minutes time at the bottom of the hour, we'll be on the lookout for the start of the press conference.
If I could swing trade, I wouldn't be looking at this chart.
So to recap what we did just see, again, the Fed did cut by 25 basis points in line.
We got 7 minutes till the press conference.
There was only 1% that was
back a little
from
bit here.
Miran, who did vote for a 50 basis point rate cut.
If I had a runner on, I may have gotten stopped down in this area.
The dot plots were all revised to show more aggressive easing ahead.
All right, we're coming into,
pretty dovish statement,
and remove this VWAP. It's unnecessary.
FOMC,
We have a new
also
low.
did make that change to its guidance as well, where it announces that in considering additional adjustments to the target range from considering the extent and timing of additional adjustments.
I'll go ahead and remove this VWAP. It's unnecessary. So right now, we are above the daily low volume weighted average price. We're right at the Fed announcement VWAP. Okay, this is when the announcement came out. So above it, it means that the average person throughout the announcement is now in the green. That'd be positive. We are still under daily VWAP and underneath the opening range. Okay, with Jerome Powell coming out. Thanks, Andrew. They don't allow tick scalping. That was like over 20 points. That wasn't even like, yeah. This is the one that I executed on was Top Step, and you're right. A lot of them won't allow for like second, like it has to be over 5 seconds or something like that. Top Step doesn't care. I don't believe that Top Step has a rule against that. The other one that I would have traded, I think, does care, but they just don't want 50% of your profits being under a 10-second move or something like that. So that would be, and I don't. All my trades have been over that, except for this one was fast. Because as soon as it started bouncing up, I started putting in order right below it and pressing it higher. And it would have been longer if I would have gotten too off, but I didn't. All right. Floating around the VWAP right now from the Fed announcement. That's that white line right here. This one right here is daily. Some might look at this and say we're kind of just flagging out. I would say, yep, we're consolidating. Just kind of moving up higher lows. Let it do its thing. This thing could come all the way back up here, right? Don't rule anything out these days. Come all the way back down here. Don't rule anything out. Would I ever do 15 accounts at once? Conrad. Conrad. Would I ever do like 15 accounts at once? Yeah, I would. I mean, if they all can copy trade, sure. But it'd be like with micros, like very small. Unless if they give me the room. I mean, I don't see why not. I wouldn't turn it down if I have the ability to scale like that. I do. I'm doing like 13 accounts right now, but the other accounts wasn't able to fire off. I only did 5 accounts there. Kat is asking, how did I know the exact moment it would be bullish? Kat, I have a video that explains the strategy and the tools that I use in order to give myself the best opportunity, right? I talk about the tick chart, and I talk about how in terms of like when everybody's on, this is a boat, right? If everyone's on one side of the boat over here, the boat could capsize. So when it starts to tip over, people tend to run back. And my executions happen when the boat's just about to tip over. And I utilize the tick chart in order to give me a gauge of where that could be. And that could be right under that minus 1,000. It's pretty rare. It doesn't happen all the time, especially when you're in positive gamma. But when it does happen, it can create some good opportunities like we just saw here. What's my thoughts on ICT? I don't have any. I don't really know. I don't understand it. I mean, the whole one algorithm that runs the system is just asinine. It's stupid. Like if you believe that, you're sorry. It's the dumbest thing ever. Especially when there's like, you can like look up vol control funds, their algorithms. You can look at delta hedging and understand what that is. So there's clearly not one algorithm. That's the most dumbest thing I've ever heard. And then a lot of the terminology is misplaced terminology, talking about order blocks and things like that, but just looking at candlesticks. talking about order flow, but they're not looking at what actually order flow is. So you can find ways to make things work by looking at candlesticks and just trading the candle, but a lot of misplaced terminology and also foo-foo thinking. Just call it what it is. It's just candlestick trading with fancy names. A lot of people actually do that. They create their own names on strategies, and it's just like it's always been around. They just rename it. It's always been around, but then they just create a new name for it and rebrand it. Nothing really new under the sun here. All right, we're at daily VWAP, and we are above the Fed announcement VWAP, so we're seeing a nice reflexive bounce right back up. Still wishing I had a runner on, but money is money. They do use big words for everything for no real reason. Yeah, that's true. But, I mean, I don't know. They just, whatever. If you can make it work, cool. I'm not going to sit there and study things that don't make sense, though. As far as like all this random terminology, like I'd rather actually understand market dynamics. You'll never hear them mention gamma exposure levels, which is like crazy. Like I didn't need to look at candlesticks to know that 65.90 was going to be a tag today. That was just where the concentration of the market was, right? And we said that earlier in the stream. Under 6,600, be careful because we can slip right down to 65.90. Where did we go? We came from there, we bounced up, we came under, and now we're back up, right? Where did we get stopped, or where did this stop, the run stop at 66.20? Why? Because that was actually pretty big gamma exposure level at that point. So people got their 66.20. Now the market's digesting. We'll see how they position. Let's look. 1 DTE. This is actual concentration in levels. We have 66.20 still growing size, and we're also seeing 66.50 kind of grow up in size here too, which is way up here. So is Powell going to send us? Or is he going to just send us right back down? We're above VWAP, still under opening range, holding all these key levels, and we're kind of right now. Daily VWAP. Some big volatility there. Yeah, exactly, Bobby.
The press conference.
You're 100% right about the
candlestick
first used in the 18th century for rice. Yeah. The strat is what you use. The strat is great. Yeah, simple, rules based, no real need for interpretation because there's rules behind the strat. Yeah. The main thing that people should really understand is the position sizing is actually most important. We can all have the same exact trades.
Inflation has risen recently, remains somewhat elevated.
But we can position size differently and have completely different outcomes, right? So if I had an alert service and I got 3 trades out of 10 right, and I told you that I made money, so I'm positive. That's maybe because I went decent size, right, on position sizing, and I let these runners run on these 3. However, if I did 3 out of 10 right, somebody else would be like, dude, this guy only got 3 trades right out of 10 and made me lose hella money. You know that's a possibility, right?
Moderation
so
in GDP growth
no matter your strategy,
reflects consumer spending slowdown.
You need a strategy around position sizing, and if you don't, you're going to fall flat on your face. So that's why I'm kind of critical on things of like strategies, but yet there's nothing backed around position sizing, expected value, the covariance variance of that strategy, right? Like how far can it vary from your expected value? These are all things that you can really look at in terms of, distribution, right? Or using like a bar chart, histogram or something like that, where you can see your trades play out over time.
Just maintaining that unemployment rate remains at a relatively low level.
Coming back to the low anchor volume weighted average price, Powell is live now.
Reflecting lower immigration and lower participation, and also says that labour demand has softened.
All right, he's talking, but it's not loaded, and that was just a minus 1,000 reading.
The job gains are running below the break-even rates.
I'm not going to execute right now into that. He's talking right now. Give me a second. Load up.
Break-even rate
Here we go.
needed to hold the unemployment rate constant.
Says wage growth.
In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run
We got
goal.
an extended reading here, but I'm not going to execute as he's
Estimates,
talking.
estimates based on the Consumer Price
I'm gonna let it
Index
kinda
and
go.
other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects
There's
could
a minus
instead
1,000 reading right
be
here.
more persistent.
I'm looking maybe
and
a
that
little
is
bit deeper,
risk
maybe
to be
minus
assessed
1,200 as
and
we're kind of
managed.
cracking lows. I'm
Our
not really
obligation
too
is to
interested right
ensure
now
that a
while
one-time
he's
increase in
talking.
the price level
See a little bit of
does
a
not
pop there,
become
but
an ongoing
just not-
inflation problem.
It's not my style near lows and
In
while
the near
somebody's
term,
talking like this.
risks to inflation are tilted to the upside and
That's
risks to
up to you.
employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the
Nice
most
bounce on
likely
that minus
scenario for
plus
the
1,000
economy.
reading. I didn't take it.
The median participant projects that the appropriate
the
level of
market
the
do its
federal
thing.
funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
So here comes the questions. 65.90 is kind of the lower marker. We're
Thank
below
you.
it over
Chris
here in no
Regaver,
man's land
Associated
right
Press.
now.
As
We're
you
kind of
know,
at that
Fed Governor
65.90,
Stephen
which is the
Myron
wall, so.
has continued,
I don't know.
kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone
Seems
with
like a good base
executive branch
outfit.
ties in decades.
The market net
Does this
flow.
compromise the Fed's independence from day-to-day politics? And
Nothing.
relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Well, great. And then just as a quick follow-up, I'm sorry, can you, you and other Fed officials have
We're
spoken
back above
extensively about
65.90.
the
Once
impact
again,
of tariffs on
there's not much going on
inflation.
below 65.90,
Although
so
perhaps with many companies appearing to eat the
is
tariffs,
the market just telling us this is where the pin is at, this is the low, it's
tariffs
kind of
may
just
be
trading around here
impacting the labor market and other
for
parts of the economy
SPX, and
instead.
we're right there.
Do you see
So
that as a possible
we gotta
outcome here?
see,
That tariffs are
for
the
me,
reason
what
we're
this means
seeing
is
some
if we do
slowing,
get that
particularly in the
extended
labor
tick reading, I
market,
know I'm talking over him,
rather
if we
than
get that
in
extended tick
inflation?
reading, it would be now more of a
You know,
time
it's
that I would
certainly
look to enter.
possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next
Oh, well,
year.
we're getting there, about
And you know,
minus
it's also
1,000.
possible that there may be effects
not gonna
on
do it right there
unemployment, but
Sorry, I'm not going to answer
I
right
would
now.
say if you're looking at why
I
employment
need to see
is
these
doing
broke.
what it's
Like
doing,
when
that's
we get
much more
minus
about
1,000
the
readings
change
and
in
it's right here at a
immigration.
potential
So the
break,
supply of
I'm just
workers
not
has
interested,
obviously come
unfortunately. I got to see
way
this
down.
actually
There's very
break
little
lower.
growth, if any, in the supply of workers. And at the same time, demand for workers has also
So maybe we
come
can
down
get even
quite
deeper.
sharply.
Maybe we can get way down here.
And to the point
Here
where
we go.
we see
Okay.
what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Still holding down there, which could be devastating if we just hold these lower levels.
Rose
But
of the Wall Street Journal.
once again, I wanted to
Chair
see this
Powell, do
crack.
economic conditions and the balance of risks no longer
Maybe open the
warrant
door
a
down
restrictive
lower.
policy setting?
So
We're well under
think we can
65.90
say
right now.
that. What we can say is this, that over the course of this year,
bounce back
we
up
kept
into
our
these areas. There you
policy
go.
at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over
the
the course
pop.
of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers
72.
for May, June, July, and August, you can I can no longer say that. So what that means is
I
that
did a little
the risks,
execution
which
there, but
the risks were
didn't
clearly
really like
tilted
that trade.
toward inflation.
That's kinda
I
lame.
would say they're moving toward equality. Maybe they're not quite out of equality.
let's
We
see
don't
if we
need to
can get
know
it
that.
again.
But we do know that
Looking for
they've
another
moved
minus 1,000
meaningfully
reading
toward
for a fade.
greater equality, the risks between the two goals. And
If
that
we do go
suggests
right
that
back
we
up to
should be moving in the
65.90 for
direction of
SPX,
neutral.
because that
That's
is
what we
kind of
did
what the
today.
gamma charts are telling us here.
Under what
Like a little bit reaching
circumstances would
lower,
a
but
larger than
the main
25
area of
basis
concentration is
points rate cut be
65.90.
warranted? And how seriously
I wouldn't
was
approach
that
it with
option
NQ. I probably would
entertained
look at an
your meeting this
MNQ
week?
back up into these areas.
There wasn't widespread
Still
support
underneath
at all
opening range and
for a
below all
50
these
basis
VWAPs.
point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when we feel that policy is a place and needs to move quickly to a place. That's not at all fate, and see
What's going on here?
cuts in the last 5 years, and you tend to do those at a time when we feel that policy is
We're
a place and
unchanged on
needs
the
to
week,
move
ladies and gentlemen.
quickly to a
Last week's
place.
closing price
That's
are
not
right
at all
there.
fate,
Still a
and
wide
see
open daily implied move. I don't know. I would say the daily implied move. Okay, here we go. All right, I'm going to pause Powell here for a
kind of
moment.
in place.
I'm
I guess
getting
I'm
lags.
just, trying to square
Okay,
the
we might get
shift
this
in the rate
undercut. We're getting
forecast in
a
the
extended
SEP,
reading here. It's pretty frothy. Pretty frothy reading there. I would look for the undercut. I prefer seeing an undercut. Dude, my what's it called? I'm gonna go ahead and close this out. Actually, I'm gonna go ahead and put on the live listen
For
here.
today's cut as a risk management cut.
That was a big minus 1,000 plus reading there, minus 1,200, the lowest tick reading of the day. Look for a potential shorter term bounce here. Quick ones, right? They've been getting faded so far. Daily EM is still lower.
And Powell just noting there's a very different picture of risk to the labour market since the last Fed meeting. So we're just seeing more hawkish reaction coming in here as amid these Fed Chair Powell comments.
Beautiful.
They did note they do not feel the need
We're
to
holding
move
down
quickly
at these
on
lower
rates,
levels,
and they
which
could pick
means
up
we can
today's
see
cut as
some
a
more
risk
sell side,
management
but
cut.
the extended readings are still working as of right now.
Powell
I'm
says
sorry
labour
I'm not
market is
quick enough
cooling
to
off.
explain
It's
every
close to
single
this
one that I'm
time to
doing.
Take that into account in policy, he says.
If we see the continued sell side action, we're going to, the green line's coming down. If we get the continued sell side action, keep an eye on the lower daily implied move for today. It's a little bit lower than where we currently are. And then keep an eye here on tick readings. They're still getting pretty extended and they're holding down there, which is bearish. You hold down there, it's bearish, okay? I know this is, live talking, but you can see
We need to
bounces.
remain fully committed to restoring 2%
But the longer you hold down
inflation,
there,
but
it
at the
could
same
tell us
time,
that
need to weigh
there's more
risks to the
selling
two
taking
Fed
place
goals.
here, okay? 65.90, let
And
me
Powell
go ahead
says
and
risks of higher inflation are less than they were in April.
doing my best to try to explain it live
Again,
and
Powell
trade at
says
the same
risk of higher
time.
inflation are
65.90 is
less
still
than
that area
they
of
were in
focus.
April.
So move back up to 65.90. Don't rule it out, but the daily implied move for the day has not been tagged yet, okay? I'm looking
And
for
Powell
another extended
says
reading and perhaps a
in the
break
labour
to new
market, They are
lows.
seeing downside risks.
Dollar's green, somebody had mentioned. That's crazy. That was a big sell-off in the dollar. So if it's coming back, it's a big move. Sorry, I cut off the Powell stream because this is actually action we haven't seen for quite some time, and I do need to take advantage of it when I can. I have a duty. Duty. All right, we're flopping a lopping, holding around here. Tick, still not under minus 1,000, but we've got plenty of little hits here under 1,000. I took some. I didn't take others. I want to see this low just really get taken out, and I don't know if it's going to, but if it does, I'm looking for that very deep reading again, and I'll fade it, right? And I'll try to fade it. Right now, still, the main area is at 65.90. Market net flow.
Powell just reiterating that's what most of the reason behind the movements in the labour market is due to immigration. But it does note not all of what is happening in the labour market is due to immigration. It says there's a clear slowing in demand.
Okay, there's a minus 1,000 print. It's like right here on the cusp of breaking lows. I can't do that on this. I have to see a flush. I have to see it flush deeper. I can't execute right there, even if it bounces. I prefer a stronger flush here at these lows. I don't like that. And this just comes with time of practicing this and utilizing this tool. All right, there's a new low. We're still holding down here. So, I mean, flush it harder, flush it harder, flush it harder, flush it harder. Give me a better opportunity. There we go. There's minus 12. Get deeper, 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 deeper. All right, maybe one right there, and this is just now breaking. So let's see potentially a little bit stronger, but a little pop back up, fade those pops, meaning if you're long, take the profit when you can, right? A couple $100 there, a couple $100, $50, whatever the case may be. But just know that if it's breaking lower and it's holding these lower ticks, it's a dangerous territory. So make sure your stops are up and don't let this get out of hand. We're not too far off the daily implied move for the S&P 500. Now we're getting a minus 1,300 tick reading. This is getting pretty darn frothy here. All right, this is what I like to see. We're right there at that daily implied move. So if I was going to oh man, we're like right there. Come on. A little bit more. My son always says that. A little bit more.
Do you know, Powell was just asked, what would the Fed do if prices were to pick up more?
Dude, oh, mother of goodness. Okay. I had an execution there, but I didn't move up my stop. All right, let's see if this breaks a little bit lower. I'm going to retry that.
Powell says they do see inflation rising this year as goods prices rise from tariffs, but he does expect it to be a one-time rise.
Okay. Still holding down at these lower tick readings. Look for the extended readings. We'll get some relief.
One-time rise in inflation, and they will do that job, he says.
You got to be very tactical here, and this is where knowing the tool really helps out. There's a little bit of a pop there. Oh gosh, I put my stop up too fast on that stupid entry down here. Trying to talk through
Powell
my
just
brain and do
noting
this
that
is
the
just
case
not
for
what I
there
want to
being
do.
a persistent inflation outbreak.
Dang, that
is
would have been
less.
like over a $5,000 trade right there if I would have just popped it off right.
And Powell says there is time to acknowledge the risks to the employment mandate have grown.
Oh, man. All right, still waiting it off. We're getting some relief from those extended tick readings. Take a look here. 65.90 is still that kind of concentrated level. Getting a little bit of a bounce back. Market net flow. It's bearish, but no convergence on this bearishness. I was at 1,300. I'll give you my updated
Powell is noting that their policy
P&L.
had been skewed toward inflation, but it's now moving in the direction of more neutral policy. Says there are more clear downside risks in the labour market.
We're now looking
That's
at
why
about
they're now moving in the direction
$2,000
of a more
times
neutral
5, so about
policy.
10 grand. Damn, I can't believe I moved my orders too fast, too quick there. That would have been such a huge trade. Frick. It's now 2 mess ups today. I'm trying to do it live. We're doing live.
Powell is noting a more neutral rate will be better.
Oh my
for
gosh,
labour
that was like
markets.
from down here in the 70s down to up to the 3, 4. Oh my goodness, that was crazy. I can't believe that. I dropped a freaking ball right there. It's okay. It's good profits, but I dropped the ball
just
twice now.
describing the
It's okay.
low-firing,
This is
low-hiring
working out the bugs,
environment.
trying to trade live with everybody, trying to
Because
walk
if
through
you do
my
start to
thoughts.
see
But
layoffs, that
it's
could
very
quickly
difficult.
push up unemployment because the
This is
hiring
not
rate is low.
something that I honestly enjoy doing. To be quite honest, it's nice that everyone's here supporting it, but man, when it comes to the potential to make
Powell says
money,
that
I got to
has
be
been a
focused.
growing
And
concern over the last few months, and that's one of the reasons they think it's appropriate to shift policy focus toward a
very
more
difficult.
balanced one.
so hopefully, so far today has helped, and that is worth the missing of these trades and the mess up errors. With a ADD brain like myself, and sometimes dyslexic, I need the focus, and unfortunately, trying to walk through what's in my brain out to everybody in real time is just like
Powell says we're in a meeting by meeting situation. Fed Chair Powell says we're in a
difficult.
meeting by meeting situation.
I'm glad to hear that,
We're
Borno.
going to be
You just
looking at
made
the
it worth
data,
my
he
time,
says.
and anything that's happened today, I'm glad to hear that. Just be silent. Put some music on. You don't care if I'm just trading silent, maybe. Yeah. Can I stop whining so much? Yeah, I can also block you because I don't need that around. So I'm just going to go ahead and block you so you can't talk anymore. So hiding you. Sorry, Avi. Unless if you want to apologize right here in front of everybody for being a douche. How about that? All right. All right, here we go. We're starting to get breaking down into these lower readings again. Once again, I do not like trading these lower readings as we're kind of near these lows. I'd rather prefer to see a breakdown on a very frothy move, okay? So I hold off on that one, and I wait for more of a stronger move to the downside with
I was
those
just
type of
talking
readings.
about the range of dot plots for this year, how 10 had wrote down 2 or more cuts for the year, while 9 saw less than that. He says that look at the projections through the lens of probabilities. That's what he would recommend his view of analysing the SEPs.
I'll share the video where I go over this strategy more in detail.
And Powell, just noting there's no risk-free path with two-sided risks,
Sorry, my camera's off here for a second.
and it's not surprising there's a range of views.
There, I just posted the video that I talked about the strategy. My camera will be back on shortly. It's I think it overheated. It's getting hot in here. Why not short? You can definitely short But I'm just not interested right now. I'm just using my strategy. Hey, thanks, Lumpiest.
Powell says the divide.
This is the most extended reading for the day, over minus 1400 coming into these lows. I want to see an undercut, and I will execute into that. This is a big extended reading. These are dangerous readings here. I'd be looking for the daily expected move to get tagged on S&P 500, which is a few points lower. These are very frothy readings here, people. Woof. Minus 1400. I haven't seen a move like this for a minute. Look at this thing go. Here comes the daily implied move. We're right about there. We're right about there. Almost got to just like throw one in the bucket. But man, this thing is getting fried. Holy moly. Holy moly, people. We're pretty close to the daily expected move for risk. And here comes the tag. I'm looking right over here on the S&P 500.
Powell says it's deeply in the Fed's culture to do work based on incoming data and never consider anything else.
Just recently got one of the more extended readings on tick. These are the type of trades I like. Unfortunately, it just broke this low. So maybe we can get a little bit of a capitulatory flush out, but we're right there on the daily implied move. Here comes the move.
And Powell just
getting
noting
ready.
We do not frame these questions through a political lens.
And I'll go ahead and take one. Now I'm just going to let it kind of sit around. I'm only doing one. I'm only doing one here. Because this thing is frothy. I want to do one contract because this thing is hot and heavy right now. Is my camera back up? Okay, cool. Very frothy reading, and it's holding down at these levels. I can pull up gold here in a second. Right now I'm just focused in on trying to get a little scalp off here.
Powell just noting how he does not think that
so far I don't like the bounce.
The Fed is making decisions based on political considerations. He does not comment on the Cook
I'm
court
not
case.
much of a fan of this bounce yet, but we'll see if it can get any more traction. My stop is going to be just about break even. It's going to be a small loss actually if the low's taken out. And I want to just see if I can get a little bit more traction on this one. Okay, now my stop is break even. It's going up to about $150 in profit. Now $275 worth of profit. Now about $350 worth of profit. Now I'm moving it up even further to $425. I'm going to go ahead and exit both positions out. Boom. There we go. Holy moly, people. Yes. Yes. There we go. Patient execution. Now we're up to 2,400 per account there. And that doesn't even take over my other 5 accounts right now. Here's my other 5 accounts with the other firm.
Fed were expecting.
And I did get a trade off in both of them that time. 1,200 per account here. And we got no, sorry, that's an older one. Where's the new one? What's this one? Yeah, this one is the old one. Bam. So we got this one, 1,200 for one of the prop firms, 2,500 over here. Hello, there's that pop-up higher. If I had a runner, that would have been great. I only did one contract given the context there. Let's go. That was right off the daily implied move, people. Not only was we a frothy tick reading, but we were right there in the daily implication, the daily implied move. Look at this. Bam. Right into the daily expectations of the market. Can we go lower? Absolutely. But that right there was a beautiful setup. Thanks, Vincent. Thanks, Vinny. What a day.
Issues with the data recently has been low response rates. They want high response rates.
Now, if you were shorting the market, you can take profits at these lower readings like this, but we hit them a lot. So shorting you could be very profitable shorting. I'm just looking at the fade when things get extended. For me, I feel comfortable doing this, okay? Somebody had asked.
Trump alongside Fed Chair Powell. Trump is speaking on Fox.
Beautiful move from the daily implied. It's just like everything lined up right there. Everything lined up right there. I'm out of the trade. That was great. Thank you. Thank you, everybody. Thank you. Hopefully today's is helping out. It's been so long since we've seen these type of readings. It's been so long. Since I posted that video, we've gotten it like a few times. It's because we're not in the conditions of the market that support more of these type of readings. And now finally we're getting a little bit of volatility that helps. It doesn't mean we're bearish full on from a swing trading perspective yet. We're still above the gamma flip line. We're still way above the gamma flip line. We haven't even tagged the weekly implied move yet. But look at that thing go right from...
Powell, just noting he doesn't know that a quarter point cut will make a huge difference.
And
so you have to look at the whole path of rates and expectations.
I wish you had the runner, but I just was too afraid to put the runner on behind it. I have to go smaller size apparently to feel more comfortable. I'll load the CTAs up. It won't show until the end of day most likely. Look at the bounce here.
Policy
from
path
that reading.
is important. It does matter. It's important to use that when monitoring labor markets.
Right, coming back to the Fed VWAP from the Fed interest rate decision VWAP, we're right there right now.
This is when you see more vulnerable people having trouble getting jobs. It shows the labor market is weakening.
What does frothy mean to me? Frothy to me means I probably won't like swing trade it. Things are like I wouldn't enter a new position unless if it's a fade trade, if that makes sense. So this was frothy selling to the downside. I'll fade it for a quick move, but I'm not going to like hold it for a very, very long time.
Powell says the labor market is softening. They
And
don't
or
need
if
it
it
to
goes way
soften
up, it's
more.
frothy.
I
I don't want to start a brand new position.
Says
swing
they will
trading at
start
frothy
with a
level.
25 basis point cut.
Thanks, New York. Thanks, Mike. Thanks, Porno.
He
Thanks,
says the market is
Thanks,
also pricing
567.
in a rate path, but he then says he's not blessing what the market is pricing at all. But it does start with a quarter points cut.
MS trader. Talking like an auctioneer, yeah, kind of is.
Just repeat that there. Powell did state that markets are pricing in a rate path, and he was just explaining that he's not blessing and that's rate path.
Blind squirrel. I actually used a market order there because I executed at that very, very frothy tick reading right into the daily implied move. I know that they kind of spread a little bit. Now, it might be different if I'm using that live account, but I am prop firm trading right now. Accounts that I can get paid from. These aren't like challenges. These are real accounts that I'm going to pull money from. And I actually have to stop trading my one account because I don't want to hurt the
And Powell just noting how consumer spending may be
consistency.
skewed to
We're
higher
right back
earners,
there to
but
that
nonetheless, it's still
65.90 people.
spending.
Boom. There's that 65.90. So if you're looking at this gamma chart, how we were stating, and
Powell says
there's a
unemployment is
plus
low.
1,000 reading here. So not only are we reaching up to back to 65.90, which was that level of concentration, we're getting to daily VWAP and getting an extended reading there. So if you're starting a new position, be careful because now we might get a consolidation and or a little bit of a pullback. But that was a dramatic move from daily VWAP right back to that 65.90 level of concentration that we were kind of hammering in on. Man, it would have been great to have a runner on, wouldn't it? Hopefully you guys did. Hopefully you guys did. If not, doesn't matter, right? If I had the runners on MNQ, I actually probably made more on NQ just catching this than a couple MNQs going all the way up to here, but it would have been less like pressure. Probably been less pressure. You made $700 in 15 minutes? Holy moly, that's crazy awesome. Sitting on your hands today, Colby? Ain't nothing wrong with that. Ain't nothing wrong with sitting on your hands. That's good. I mean, really, honestly, the market hasn't done anything, if we're being honest. We're down 32 basis points. Let's get out of this tiny time frame. Let's go over to the SPY chart and let's take a look, right? Yeah, it's very volatile here, right? It is. But overall, what do we look like as for the day? What does this look like? This doesn't look like anything bad. Not right now. This looks like a hammer candle forming, right? It doesn't look bad. It still looks bullish. Look at this thing go. This thing is flying. This thing's flying. Look at it go. Holy moly. Let's pull up the tick chart again. Pull back a little bit on that 1,000 reading, but now it's not even there while it's pressing higher. So we'll see if it kind of doodles around, dances. Insane. Would have been great to see a runner. 261. That's like it's like 200 points basically, almost. Holy macaroni. Holy macaroni. Went from up being 10K to 5K. That's tough, Dan. That's tough, but also you got, like, sometimes if that's the case, just take the win, reset your mind, and don't try to make back what wasn't even a completed trading session today. You know, it's I struggle with that too sometimes, where I'm like, I'm up and I'm trying to, like, get it back. I'm like, wait, why am I trying to get it back? I'm up a few $100 today. Like, let me just take today, reset, and come back to it. And I don't need a rush, right? I'm trying to do this for the long run. I always get so locked in on the day, and I'm like, oh, I gotta make it back. Oh my God, well, why am I trying to make it back? I'm trying to do this for the next 30 years. I'm trying to do this forever. I love trading. I love the markets. Nice and easy. Thanks, Antonio. Yeah, so it's easier for me to go long than it is to short here. Here and down here. It just is. When I looked at market net flow today, like, yeah, it was pretty bullish throughout the day. Now it's not all that great.
Powell just
But there's no
continuing on
convergence.
here
So I
regarding
don't know.
goods
It's
inflation.
easier
So
for me to go
25
long.
years, it's generally been
At
negative.
least now it is.
Over the past year, it's 1.2%. And I think goods inflation is contributing 0.3 or 0.4% to PCE inflation.
Yeah, I'm trading future contracts. I was just trading one NQ. Look at these moves. Wonderful. Like, just finally some two-sided trade and some big moves.
Does note that tariffs are mostly being paid by the companies that sit between exporter and consumer.
Man, I messed up twice. That would have been a big difference in P&L today too. But there'll be more days like this. You just got to take advantage from when they're here. You'll own nothing and be happy. Yeah, Jeff, you could use different products. You can trade equities. I just find it quicker.
Tend to pass on higher prices.
Trading,
so far, they haven't. But
futures,
evidence is very clear. There is
and I'm
some
pretty
pass through
fast,
to the consumer.
So I personally use this strategy via futures market, and that's pretty much it, actually. But you definitely can. You just need to maybe space out the risk if you're trading the equity portion or even options at that point. You need some pretty fast execution.
Powell asked about his plans on staying at the Fed. He says there's nothing new on his plans for staying at the Fed. Of course, his term as chair does expire in May next year.
If you're doing this from a swing trade, or not a swing trading perspective, but like a stock or whatever option perspective, typically on moves like this, you give yourself a reward to 1 and a risk of 2. And I know that sounds crazy, but the thing is, it's a high probability strategy. So when it does bounce, you want to kind of get your fair share and take in the win. And if it loses, right, you just basically have to win, X amount of time. You can do the math. But from what I've noticed is if you space it out like that, it's a little bit easier, a little bit better. But when I'm trading futures, like I want better risk to reward, and I'm a lot quicker than typical. A lot of people, like, I would say any professional that probably uses this might actually be able to hold it on longer than me. It's different for everybody. It depends on what prop firm they're using or if it's their own capital and so forth and how they approach it. But I'm pretty quick. Yeah, options are tough. I don't have any price targets on GDX. I should probably look and see what that's doing. I took profits this morning and I took profits yesterday on that short. So the position now is pretty small. I guess I'm up right now.
So Fed Powell just noting that the only way for one voter to move things around is to be persuasive and based on the data. So that's how it's going to work.
Okay, so an idea for a VWAP tag, people, is this was a very strong move off the lows. Like, that's incredible. If we were to come back in, just watch the low VWAP right there, where we saw this move from, because that reaction is probably going to mean something. Okay, I know there's all kinds of VWAPs on my screen right now, but the one I'd say focus on, like, I'm going to take this one off my screen, right? This is the daily VWAP. I guess that matters. This was the announcement VWAP, which is kind of in confluence with that.
Powell just toned the line that they're going to do everything they can to use tools to achieve its goals.
You know, wherever these are, if it comes down and pulls, like this, it'll get digested in a second. Like, you know, strong move up could get digested, but I'd be looking at that low VWAP because sometimes the first reaction off of them can be the stronger ones. But wow, what a bounce. Okay, so go back to the GDX thing because I do have a position that's technically short here. I don't even know if I want it anymore at this point. Holy moly. Okay, there goes. That was a over 900 reading, 950 reading right here. Let me go back to, I got to go back to tick now. I'm going to have to look it up on my other computer. Or that was 1,000 reading there. So it's getting a little frothy up here at these levels. Look at the low right over here. This is the underneath, the underbelly of the opening range. That's still 20 points away. Oh, we almost just tagged it right there. And then we're almost at the over 1,000 reading. So there's the almost over 1,000 reading. So now you can potentially see a little bit of a pullback.
With respect
and
to
then,
the labor markets.
like I said, if you want to fight that, be my guest. I'm not going to execute right now. I'm not going to execute on that. I'm done. I think that I'm done for the day. I don't need to push my luck. Okay, so the dust position, like it's kind of running right now, and I probably should have been paying more attention
Powell
to that.
says the new data suggests there's meaningful downside risk to the labour market, and that's broadly accepted.
I should have paid attention to this down here. I'm just going to go ahead and reduce the position again.
And Powell says almost everyone wrote
attention.
down supports of this cut. So Powell says almost everyone wrote down supports of this cut.
I'll keep some on. I'm going to cut it down, though. Done. I have to do it from my phone. Okay. I wish I was paying more attention. I probably would have taken some more off down here. Unfortunately, I got a little bit distracted. Not surprising.
And Powell says it's not a bad economy. Powell says from a policy standpoint,
David.
it is
Thanks,
challenging
Oscar.
to know what to do.
Why
Powell
NQ
again
over
stating
ES?
it's not incredibly
No
obvious
reason.
on what to
You
do.
can definitely use ES. This would have been great for ES. Absolutely. I don't know. I just kind of found my way with NQ because it's like volatile. It moves a little bit more.
They need to keep
in
their
and out
eye
faster. But yeah,
on
ES would be
inflation
probably a
as
lot
well
cleaner,
as maximum employment.
more liquid, better spreads. So yeah, you'd probably be better off doing ES, to be quite honest. I don't know why I haven't changed. I don't know.
Just noting they did act today with a high degree of unity.
I do like NQ's volatility.
And Powell just talking about the break-even rate, says you could say it's somewhere between 0 and 50,000. So he was asked about the break-even jobs rate, says you could say it's somewhere between 0 and 50,000. Just again reiterating that break-even number has come down quite significantly. Again, some of the expectations before some of the recent jobs reports was between about 30 and 80,000. Powell suggesting between 0 and 50.
CVA. Saying home builders are taking it on the chin a bit. All right, let's take a look at the dollar. Let's look at these markets. Dollar came all the way back. That's quite the move back in the dollar. Big reaction to the downside, big reversal. Holy macaroni. Wow. That's just like 2017. I tell you what, in September, we hit a new low and then it completely reversed. And then we went higher and then we went
Just
lower,
noting
right?
the speedy decline in both supply and demand for labor has got everyone's attention.
10-year yield completely reversed. Consumer staples, leading sector, then utilities and energy. Oh, yeah, I forgot I have a position in Target. Is that getting smacked too? Yeah, kind of. Not really. 80 basis points down. I liked Clorox. I took a little position there. That's up 22 basis points. Well off the highs, though. That's unfortunate. Got a couple positions there. Oh, I took that Halliburton position. What are we doing there? Down on the position there. Still within that consolidation. I want to go into my other account.
I was
See
noticing
how
it is
that's holding
gratifying
up
to
so
see
far on this.
economic activity. It's holding.
Let me see here. Oh, I took profit, so I'm technically flat on the day in my swing trading, which I guess is good. But isn't SPY up on the day or no, SPY's down? All right, so I guess I'm outperforming the SPY for the day in my swing trading account. Day trading account
Again,
is
Powell
fire.
just taking the tone throughout the press conference, but it is the risks to the labour market that were the focus of today's decision.
Yeah, gold really did reverse there, man. What's some volatility there in gold? Okay, that's because the dollar's rising and the 10-year yield's rising. That's straight up because the correlations there were insane. Silver, it's coming back down. So I have a little bit position in dust left. Now, the reason why silver is so important is because the correlation that silver has with miners is crazy. So if I look at this just for the day-to-day, look at this, down, up, down. What is GDX doing? Down, up, down, right? So I removed some of that there. We're at 12:14. We're nearing the end of the trading session. We are getting, once again, another extended reading here. And that's into what? This is the reactionary area where I was talking about, the VWAP low, okay? The VWAP low. So let's see how this kind of responds in and around this area. And that happened to be on a extended tick reading. And then daily VWAP is right down in there. See if we can come down to it, flutter around. But you typically get the bigger responses on these first tests. Typically. See you, Rich. Thanks for tuning in. Have a great weekend. What's your sign? Wrote some of those SPY puts to the daily EM. Dude, great. And thanks, Ando. Thanks, Ando. Holy moly, people. Holy moly. Oh my goodness. This is crazy. All right, so if you were able to take that trade, nice little pop there. Remember, just manage risk as you see fit. You got a good reaction off of that. If you just did one NQ over here, that'd been over like $500 or $600 right there. That's crazy. I got a phone call coming in, and I think I'm going to call it quits. Give me 1 second here. Oh, holy moly, guys, gals, everybody. Look at the reaction coming off of this. It's fun to show it live. It's fun to show it live and be able to show you guys. I think I'm more excited about that. I'm not really excited about it. This is what I would have been doing anyway if I wasn't live, and I would definitely been just quiet the entire time. But being here and being able to show you in real time is cool, and I tried my best to communicate it. Had some trolls show up on the stream, but they were outweighed by all the good
now. It is hard to have great confidence in
vibes
forecasts
here. So thanks for everyone for tuning in. I'm going to call it quits. I'm tired. I'm done. This was an insane day for me. Mike, I'm glad to hear that you did good. Blind Squirrel, thanks. Thanks for tuning in. Thanks for communicating. Thanks for being nice, being joyful. It's easy to spread hate. That's the easy thing to do, ladies and gentlemen. It's hard.
Fed Chair Powell says
find
on the
the good
balance
in
sheet,
people,
they're
even
still
when you
in
disagree or don't
abundant
like them.
reserves.
I love you all. Appreciate it. Thanks for tuning in. I'll try to do this again sometime. My profit for the day. Well, let's do it because I took a little bit of a scalp there. Profit for the day. Let me go ahead and screenshot it. Here's 5 accounts from one prop firm that is funded. Bam. 3,000, 3, 6, 9, 10, 11, 12, 13, 14, $15,000.
Again, Powell was noting he has
That is
said
real
before, and the guidance
money.
on the
I
balance
can
sheet is they would
take
stop
that
somewhere
out.
above the ample
And
reserves.
then my other
And
account,
they are, as they get close to that, they will monitor it carefully.
I
He
had
does
to
not think it
stop
would have a
trading
macro
because I don't
effect
want
when
to
talking about
blow the
balance sheet.
consistency ratio out. So let's do the math. 12, 12, 1,200, 1,200, 1,200. So we got 15,000. So if what is that? 5, 6, so 6,000. So basically, I'll be right there. Oh, give me 1 second, guys. Okay, so what is that? Dude, that's like $20,000 a day. Holy moly!
And Fed Chair
That's
Powell
insane,
says usually
yo.
think that moderate long-term interest rates will
This one
result
though,
from stable
I'm
inflation
very
and
close to
maximum
being able to
employment.
withdraw my first withdrawal, which could be 15 grand. I'm right there. It's been so close. I had a down day one day, and now I'm back. Okay, I gotta hop off. I got the pool guy here. I gotta talk to him. Thanks for everybody for tuning in. That was insane. I love the volatility. Be safe, be careful, trade wise, focus on risk. Thanks, Bobby.
And Powell does not think they should incorporate that in somehow and separately from the dual mandate.
All right, I'm out. See you guys. Thank you. I'm seeing these comments load in right now. Thanks everybody there on Twitch. MS, Myra, Doppler, Exotic, Rich, Mark, Matt, Vinny, Let's See, Bobby, Baseball, Jay Haas, Denny. I know I'm missing a lot of people. John Remy, Pankaj,
Talking on default
Lumpiest,
rates,
Henry,
says they're
Matt.
not at a level that
All
are
right,
terribly
I gotta
concerning,
hop off
but they
now
do
'cause
watch
I
them.
gotta go to this thing. All right, y'all. See ya.